This Creditors in Commerce classroom session, hereinafter session, is the private exchange of ideas and concepts between the providers and the recipients. The content is not meant as legal advice. The use or attempted use of any idea or procedure discussed in this session as applied to the recipient's own personal transactions, cases, or controversy, or applied to other cases, may or may not result in a favorable outcome or the same outcome as discussed in this session. Each transition or transaction, case, or controversy may be different as a result of unique actions or unique statements made by the parties therein, and each different act or statement in any transaction affects or may affect whether any procedure or idea discussed in this session is relevant to your transaction or that the outcome thereof will be depicted as in this session. The discussion of ideas or procedures in this session is not exhaustive of the subject being discussed. Many ideas and concepts that can affect the outcome of any legal or commercial procedure are not discussed in this session, and the fact that you may not be aware of these issues may have an adverse effect on the outcome of your procedure. It is the responsibility of each party to understand his own transactions and to apply the appropriate and complete concepts necessary for a procedural and substantive remedy thereto. This session may be redistributed privately by any recipient to another recipient requesting them, conditioned upon the fact that this notice is provided therewith. If you have any questions, you may contact Brandon by email at harmony@creditorsincommerce.com or by telephone at 702-866-9077.
All right. I know that a lot of people are really anxious to get going on 1099 OID kind of stuff. And so what we're going to talk about today is money, how it's created and how it moves through the banks. And from your understanding of how money works, you'll understand exactly how to fill the forms out correctly by just reading the instructions that the IRS gives you and not listening to some other person telling you, yeah, and you put this information here and you put this information here, and it seems to be completely contradictory to the instructions. There's a reason for that, because they're doing it wrong. Okay? So first I want to start with a little creditor exercise. Anyone just want to create a short little list? What is wrong with the world? Anyone got any suggestions to put on our list of what's our wrongs?
How about nothing? Money.
Well, nothing will be the background. And we'll let the list of things be the foreground.
How about wars?
War? Corruption.
Money.
Debt.
Money, debt.
Choosing unconsciousness.
Unconsciousness?
Yeah.
Conflict. Imbalance. Disease.
Hold on. I don't write that fast.
Randy, can you repeat what they're saying so we can do it?
Well, I'll read the list. Okay, sorry. I forgot we don't have microphones on right now. All right, so far we got war, corruption, money, debt, unconsciousness, conflict.
Reverse priorities.
Reverse priorities. What's another way of saying that?
Disease.
How about... Actually, I wonder if debt/debtor handles that. Is it being a victim, refusing responsibility? Is that kind of what you mean? Okay.
Yeah. Somewhat.
Okay. Anything else?
Liberty.
Debooty? Liberty? I'm like, that's what's right with the world. All right. Liberty is what's wrong with the world. In stake?
No, liberty in stake. Yes. Liberty at stake.
Okay, so instead of that, how about, so what's the opposite of liberty?
Voluntary
Voluntary servitude.
Okay, so slavery?
Yeah, slavery.
Okay. All righty. So we got war, corruption, money, debt, debtors, unconsciousness, conflict, and slavery. That's a good list for now. How many would say that war is wrong with the world? Show of hands. Okay, maybe half the people. How many think corruption is wrong with the world? Okay. How about money? Money. Debt. Okay. Unconsciousness. Okay. Conflict. Okay. And slavery. Okay. Who didn't raise their hand for any of them? Just one? Okay. Alrighty. So those of you who think war is wrong with the world, there's war in your heart. Those of you who think corruption is in the world and think that that's a problem, then you have those feelings about you. Money, I would say that's like an abundance conversation. There's not enough. I would say, what are you withholding from the people around you? Yourself. Debt, if you think debt's a problem, debt is what creates commerce. You can't have interaction without somebody being a creditor, somebody being a debtor. Debt, so those of you who think debt's wrong with the world, maybe you're not being a creditor. Unconsciousness, how many of you feel that you're unconscious? And conflict, I'm sure everyone here has conflict in their heart, or else we probably wouldn't be here. And slavery, who are you holding in bondage besides yourself? So, you've been charged. Does anybody disagree with the charges? Perfect. Creditors? No? You accept it. You accept it and you pay it. You're a creditor. Okay. So I just wanted to thought there'd be a nice little exercise just to let you know that there's actually nothing wrong with the world. Everything that's wrong is just what's wrong inside. And good news, you have complete power to change that. And then the world around you will reflect it. Okay, so let's see if we can get into money. There's actually a couple documents that I'm sure everyone here has an email address, and you put it on the list. Okay, you'll receive a link that'll have several documents in a zip file to download, and most of the techniques we go over tonight are in those documents. Read them thoroughly, know them, if you want. If you wish to learn about where I'm getting this information. The information is coming from the Federal Reserve and the IRS. That's where most of the information I'm going to present to you tonight comes from. Okay? So it's not some magical place where it may be or it may not be. This is straight from the horse's mouth. The Federal Reserve document that covers this topic is called Modern Money Mechanics. It was put out by the Federal Reserve Bank of Chicago. There's an affidavit on there by a Walker F. Todd, and he was actually an expert witness on money for the Federal Reserve. And there's the code sections from Title 26 of the Internal Revenue Code, 1271 through 1275, which cover original issue and original issue discount. Then there's the instruction sheets for the OID from the IRS. There's publication 1212 from the IRS, which is on OID. And there's also some sample forms in there. Just to give you guys an idea of what the forms look like and what you'll be dealing with if you choose to deal with these documents. There's an example 1099A, an example 1099 OID. When I'm referencing and talking about the documents and we talk about what you do with what, whenever I say copy A, I'm talking about the red scannable top copy. That goes to the IRS usually. Well, always. Then the next copy is called copy B for recipient. and that is the copy that goes to the recipient, and copy C, which is the payer's copy. And then same with the 1099-A, it's a three-part form. You must get these forms from the IRS because they go through a special scanner that needs to read this ink a special way. 1099-A, copy A, 1099-A, copy B, and 1099-A, copy C. Now, this one isn't payer and recipient. This one is lender and borrower. And I don't know if we'll actually get to doing any 1099-A stuff today, but we'll get as far as we can. Yeah.
Why is that scan? Can we hold the questions until you have a mic?
Yeah. I forgot we want the questions to be on the mic.
Why are those being scanned? Is that like a high volume item
Yeah,
now?
all 1099s, whether they're 1099 miscellaneous, 1099 INTs, even all your W-2s, when your employer sends in your W-2s, they're on a red scannable sheet like this. The IRS takes them and feeds them into a computer. That's how they get into the system. And then you take your copy typically and staple it to your 1040 and do whatever you're going to do with it. 1096 is a transmittal form. Whenever you send 1099As or 1099 OIDs to the IRS, you send one of these with it. And this is the transmittal form. Okay? Alrighty. Let's do money. Alrighty. Does anybody know how money is created?
Signatures.
Signatures. And what does the signature create?
Permission to contract in commerce.
It's evidence of a debt, usually.
Okay.
So we pass money around. The money we use is debt, right? A check is evidence of a debt. If I sign the check and I give it to you and I write it to you, it's evidence that I owe you money. Okay. So what happens with the Federal Reserve and your bank when you deposit funds is if you endorse a check and deposit it into your bank account, and this is straight from the Federal Reserve, okay, your check goes to the bank, or you deposit your check endorsed to the bank. The bank gives you let's say it's a $1,000 check. This pen is broken. I need new black. Okay. Thanks. That's cool. I'm going to do the liability side first. So how many are familiar with double entry bookkeeping? Okay, for every asset there's a liability. Okay. Right here is a $1,000 liability for the bank is created. The bank sends the check over to the Federal Reserve. Let's see if we can fit all the ledgers on here. Federal. Okay, so bank sends the check over to the Federal Reserve. Federal Reserve says, okay, go ahead and put a temporary credit right here. Okay, for every asset, which is in black. Did you give me a new one? That was the new one. That was the new one? Yeah. Okay. I'm good. Don't mess with the mics. Yeah, no, I will need a new one. This one sucks. All right, we're just going to write in red. Stay away from that thing. All right, so $1,000 asset, which is the security, the check itself. Now, what happens is the Federal Reserve holds over here the bank's account. See, the bank itself has an account over at the Federal Reserve. You've heard of reserves, that we're on a fractional reserve system. Well, whatever's over here in the bank's account, this side is a liability to the Federal Reserve, but the Federal Reserve holds an asset over here to offset that. Okay? So you have this credit is the same as this liability. It's a credit for the bank. It counts as their reserves, so they can fractionalize it 10 times, okay, and accept loans based on that. So you have your $1,000 in an liability account at the Federal Reserve, which is the reserves of the bank, is the same as the assets over here in the bank's ledger. So on the bank's on their ledger, it's an asset. On the Federal Reserve's ledger, that money is a liability. So now the Federal Reserve gets the check, and they notice that it's from Bank C. Okay? So they debit Bank C's liability account, or the Federal Reserve's liability, Bank C's asset account, which reduces their reserves by 1,000. Whenever a bank's reserves get reduced, it must reduce its deposits by equal amount. So the bank is now put into a position where it must reduce its reserves by $1,000. So what does it do? It reduces your account by $1,000. It says, hey, since you're the guy who authorized that check, we're going to reduce your account down to 1,000. Okay? So, is the check itself money? No. It is. I'm here to tell you, it is. It's got a signature on it. It's a negotiable instrument. It's money. Okay? So, $1,000 endorsed check went in here. The credits got put on temporary hold here. When the bank when Federal Reserve went to this bank and said, hey, we're going to reduce it for 1,000, is that okay? And they look at the account number, they go, yeah, that guy's got $1,000 in there, go ahead. So they reduced the account. Now there would be another ledger over here for Bank C, and Bank C would list this money as an asset, and it would have deposits over there that it just reduced by 1,000. Okay, so that's what happens when you deposit a check. Oh man, and this black doesn't erase either. Yeah.
So it's a number. After the signature, it's a number until it actually hits the place that it's going, and then it turns into money.
It's money the moment you sign it.
So it's a note.
Now remember, all we showed was the bank's ledger.
Yeah.
You have your own ledger.
Yeah.
Okay? Your trust, your corporation has its own ledger. It was on the books of your trust until you deposed yourself of the funds and gave it up to the bank. Okay? Now, whoever wrote you the check, the check itself ends up over at their bank eventually. You remember back before 2000, they used to send you your checks back?
Yes.
When was the end of the last bankruptcy? 1999? Okay, you know why they don't send you your checks back anymore? They're securities. Now, what? So, here, now we're moving over here, we were dealing with Bank A and the Federal Reserve. Now we're going to come over to Bank B and show what happened with that same check. Okay? So over here at Bank B, we're going to put two ledgers. We're actually going to leave the Federal Reserve out of this because you saw what happens at the Federal Reserve for Bank B. So Bank B, this is the deposit account, so to speak. It went negative 1,000 for Brenda when she, or for Dylan when he sent Brenda his child support check. So this account went down 1,000. The check itself is a security. Now, a security is an asset to the bank. Okay? So it gets ledgered over here as an asset. However, it is not in the Federal Reserve account. Remember, what they can leverage is what's credit on their Federal Reserve account. So this is being held in an escrow account at the bank, this $1,000 check as an asset. But there's no liability funds over here for it, so it's just sitting there. Now, a bank can sell, when a bank needs capital or it needs reserves, according to the Federal Reserve, there's one way a bank can increase its reserves: selling securities. So the bank can sell the security. Who are they going to sell it to? Federal Reserve. Who's the Federal Reserve going to get the funds from? Treasury. Okay? So, and this, like I said, follow modern money mechanics, and you'll see the flow of funds and how it's moving. Okay, now this check is sitting over here. Your account, you're Brenda, and your account's been reduced by $1,000, right? And your bank is holding this security up here. Okay? This security has a face value. The face value of the security is whatever you wrote in on the amount of the check. Okay? That security is actually your property. The way the bank gets away with selling it is they have to wait what's called a testing time or a testing period, which is 36 months according to the IRS, before they can declare it abandoned. Then they can sell it and increase their reserves. Okay? So, because they've got this $1,000 security, at the end of the year, Brenda goes to do her taxes. And she remembers that security she created, and all of a sudden she remembers that the bank never sent it back. She did not get her security back. So, what happened? It's an original issue discount is what happened. The original issue was Brenda writing the check. Brenda wrote the check to Dylan. Dylan deposited it. So, Brenda wrote the check ended up back in this escrow account. Okay? So, the definition of original issue discount is the redemption value minus the issue price. Okay? How much did Brenda's bank pay her for that $1,000 security? Nothing. What's the redemption value? $1,000. So what's the original issue discount? And if the original issue discount is $1,000, did they give her the $1,000? No. So it's been withheld. Okay? If you look at your if you look at your 1099 OID, there's information for the payer, information for the recipient, an account number. Box number 1 is the original issue discount. Now let's say that that's the only check Brenda wrote that year.
We got some new marks for us.
Okay. If that's the only check Brenda wrote that year, then there's $1,000 in box 1 because that's the original issue discount. Okay? Now, seeing as Brenda's not a financial institution and didn't put any interest terms or anything on the instrument, she didn't write, 5% in 2 years or nothing like that. She just wrote $1,000 on the check. So, box 2 and 3, which box 2 is periodic interest and box 3 is early withdrawal penalty. None of those exist, so they would be zeros on the form. Box number 4, federal income tax withheld. What is the federal income tax withheld on this particular transaction? $1,000. Okay? So the $1,000 of the original issue discount, which is the redemption price or redemption value minus the issue price. Okay, that's the original issue discount. And the amount withheld is how much did they hold on to that they didn't give you? And they didn't give you any of it, so they withheld the entire amount, $1,000. So, box 4 is the same as box 1, the total amount of original issue discount, if it's all been withheld.
Can you explain how that $1,000 is defined as a federal income tax?
Can I how it's defined as a federal income tax?
How is it a federal income tax?
The bank itself is withholding a tax. For instance, if the money is due to you, you're the original issuer, that's the redemption price, and they paid nothing for it. So basically, since they're withholding those funds, they're acting as an agent for Internal Revenue on those funds. And if they wait the 3 years, they get to sell that security. Now, then they'll pay the tax on it. But until those 3 years are up, it's probably just sitting there. Okay? Yeah.
What if you have a joint account? Then what happens then?
If you have a joint account,
with somebody
it
else.
doesn't matter because each person is authorizing the funds. It depends on whether you file a joint 1040. Is it
Wait for the mic before you ask your question.
Oh, sorry. Okay, so what if the joint person passed away? Then do you just file yourself?
You could. How would you file your 1040 as a widower?
I don't know.
See, the thing is, when you have a joint account, typically you're married. Is it a situation where the parties are married or no?
No.
Okay, so it's a joint account. Neither is married. Some parties are writing checks. Like both parties are writing checks.
Yes.
Okay, so realistically, you're both creating the credit each time. So it depends on how you're going to file your 1040. Is she going to declare original issue discount? And if she is, which checks is she declaring? Is she only declaring the ones she signed? If so, that's fine. Realistically, you can both sign for the full amounts on each, as long as the other doesn't. So if one person's going to file all the OID, that's fine, because you're a signer on the account. Whether it was your signature or not, you're an authorized representative on that account.
So for past checks that she wrote, and we're joint, I can claim those checks that she wrote because I'm joint on it?
Yes. Were you joint on the account at the time?
Yes.
Yes. Because realistically, you're both agents of the account, and you're both trustees on the account. So the funds need to be claimed back. If you said the person's deceased, if the person's deceased, then there's no way for them to claim it back. So you'd have to claim it back. Otherwise, you're letting it sit. See, what happens if you don't claim this back? You just created debt.
In the world.
Yes.
Yeah.
Okay, this security outstanding and not coming back to you creates debt. Every time you spend money in public, you're creating debt. If you don't get it back, the debt just gets bigger and bigger. So people, I know, like to ask the question, well, how much is out there that we could get back? And in reality, how much debt have you created? It's at about $10 trillion right now. That's how much debt we've created. Okay? And we've never claimed any of it back. Well, I take that back. Some people have been doing this since the 50s and 60s, getting these funds back in different ways. But realistically, the modern movement, I would say late 80s, late 90s, really, for the OID end of this. So since the late 90s, there's been a lot of people claiming the funds back, but not enough to reduce the debt significantly. Microphone.
How many years back can you go if you have a box full of old checks? What are those?
What's the testing time?
36 months.
36 months. After 36 months, this shit's gone.
What if you're holding the original checks?
It doesn't matter.
Okay.
Oh, wait, you have the original checks?
Right, before.
Well, you were supposed to send those to Treasury. See, now you're not in the same position. See, they're doing you a favor by keeping the checks. See, when they sent the checks back to you, well, now you got to send them to Treasury, and it'll credit your account. But it's better for them to hold it and let them deal with the Federal Reserve and Treasury.
So you're talking strictly, is this the physical checks only? Or if you're
No.
paying out of like my auto,
just
paying out of my online account to Visa?
Okay. So how did you pay?
I just clicked the box that says pay Visa $500 and.
So what was it, a debit card transaction?
Well, just out of my checking account.
Electronic transaction?
Electronic.
EFT, is that what they call it? ACH? You put your account number in?
Yeah.
Okay.
It's right out of my checking account, so it's
Okay.
Union Bank.
Any transaction you authorize out of that account creates a security. Okay. Back in the day, everything literally had a written security with a signature on it. Remember, even to get cash withdrawals before ATM machines, didn't you have to sign to get that cash withdrawal? Right. Yeah, because you're creating a security with a face value on it, and that goes and sits in the asset account. Okay, so and that's why credit cards have the signature on the back. Every time you swipe it, you're signing your name. Every time you enter a PIN number, you're signing your name. Okay, and it creates a security. So all that goes out of the account, really, you're authorizing the issuance of. Even when your bank just says, oh, yeah, we decided to give you a bounce check fee of $45. You authorize the creation of those funds. And that's sitting over here as a security. Okay?
Yeah, sure. So if you get your original checks back, does this affect how you fill out your tax forms?
If you get your original checks back.
Right. Without sending them to the Treasury and you're holding them, I mean.
If you're holding them, then there's no original issue discount. Now you haven't redeemed them, right? There's a redemption value to them, but you haven't redeemed them.
So now, okay, so then say if I do send them into this place before 36 months, right? Does that affect how, and my account gets credited, right?
Right, but it may only be through Treasury. So I don't know if there's any recourse for you to actually get the funds back. You could give it a try. But maybe send a couple of them to Treasury with a cover letter saying, hey, send me the funds.
But are you supposed to fill out your 1099 or forms?
No, because there's no original issue discount. At that point, the security wasn't withheld from you. They returned the security. So now it's up to you to redeem it. So you can choose to go get it redeemed. You're sure they're the originals too, right? Not copies?
This is just hypothetical.
Oh, okay. Because I know they send out copies, but they usually make a big deal now if you want your originals.
Oh, really?
Yeah. Because, like I said, probably something happened at the end of the last bankruptcy that this may have been part of the resolution of the new debt, was that they were going to hold these securities that we're creating and not return them.
But we don't know that for sure.
No, but that's when it changed.
Right.
It was at the end of the last bankruptcy. So I think it's interesting that that those events correlated, but it doesn't mean anything. Give it what meaning you will.
I just had a quick question. So just given the question, how much debt have I created, and that there's a 36-month period, is there a way to settle the debt prior to that, to whenever I started creating debt, like with having a bank, 15, 16 years old, having a bank account, checks, that's like, is there a way, to create an even, flat, because if I don't redeem that escrow from way back when,
right,
there's a gap, right? It's got sold. So is that created? Then is that like complete?
Yeah.
Or is there a way to redeem that to just? I mean, not like I'm going to get funds back, but is there a way to just settle the debt that I've created?
If there's open accounts, like for instance, if you had a checking account that you no longer bank through, or if you have an old credit card account or old loan account or whatever, those accounts are probably still sitting open with your security sitting in there.
Even if they're more than 36 months old?
Possibly, yeah.
So there's a way. I mean, again, without necessarily getting funds back, but just taking responsibility for closing that escrow account to not create debt in the world.
Right, and you can do that, but that's not through the OID.
Okay.
That'd be with the A, the 1099A.
Okay, got it.
Okay, that'd be what you'd use to go close the accounts. Basically, with the 1099A, you're coming in and you're saying, hey, acquire that asset.
Great.
I'm acquiring that asset. And by you acquiring the asset, there can be no liability. Okay. So, for instance, you've got an open court case, and you acquire the asset of the court case. There's no more liability. The court case goes away.
Got it.
You acquire the asset in your loan account. Let's say it's $100,000 over here that they loaned you, that you loaned them, actually. We'll get into that. So there's $100,000 sitting there. It's an asset. And so there's a $100,000 liability over here. You do an acquisition of this asset, which is the promissory note you created. That's a deposit instrument. Yeah, if the account's still there, now you're not going to get this money back.
No, I'm just saying
you're just going to close this account. Yeah.
Just creating
Yeah.
debt in the world.
Right.
Reclaiming it, creating a complete
Yeah,
zero
because
balance.
getting rid of the debt. Yeah, getting rid of $100,000 worth of debt in the world.
But if it's less than
Wait, microphones. Where are we at?
Just to clarify, though, if it is less than 3 years old on that home debt, you can get the money back. You may be able to.
Yes, but why would you? And how would you? See, it wouldn't be with the A, but what happened when you signed the promissory note? Isn't it just like a check? It's got a face value on it and your signature on it. Okay, so it's a security. So when you deposit it, okay, this is actually slightly different than an endorsed check because you actually made it out to the bank. You made it's like as if you walked into your bank with a check from a different bank account, but it's your bank account over at Bank D, and you sign it and you deposit and you write it to your bank. You basically be just giving them $1,000, right? So that's what you did with the promissory note. You basically did a cash deposit, which created $100,000 in asset and automatically created the liability funds in the deposit account. You know what happened to those funds? They went to the seller. So basically you went in, did a cash deposit, they gave you the cash back, it went to the seller, but they're greedy. They're like, we're not going to just do this transaction for free. So they give you some bull about, oh yeah, it was really tough getting you that loan, so we're going to need some money down.
How about the whole
And how much do they demand minimum for a down payment?
20-30%.
The lowest, 10. Well, isn't that interesting? So if they got 10%, isn't that reserves? They just got reserve funds in the amount of $10,000. So what can they create out of that? Another $100,000. They got enough out of your down payment to create the entire amount again. Then they get you to pledge your property to you paying in on another security, which they're going to sell because of the future value in that. They're like, hey, we got this security that these chumps are paying in on. So your security may only be worth $1,000 a month, but you staple it to a couple thousand of those.
10 times.
Yeah. So they sell these bundled securities and they're like, hey, check this out. Do you want to buy this? This thing makes $10 million a month. Will you buy it for $100 million? And some other bank goes, yeah, we'll buy a $10 million a month security for $10 million. So now they get $10 million. So they already got the $100,000 back from the new deposits they were able to create when they took the down payment. Then they sell the security on the future values that's going to probably equate to, if not the full amount, close to the full amount of what they loaned you. But what actually happens is, and even according to the Federal Reserve, is you're the one creating the money. When you walked into the bank and deposited the promissory note, you authorized them to set up an asset here and a debt here. Okay? The debt is your deposit account. But because you were buying a house, they said, okay, well, we send the funds over to there. However they did it. Cashier's check, direct bank transfer, however they sent it there, that was the funds you deposited. But the security's still there. So remember, what happens now that this liability's been cleared out? This security's over in this column now. So they've got $100,000 over here that they can't do nothing with until they what? Sell it. And then when they sell it, they have $100,000 more in reserves. Okay? So, how much did they pay you for that? Huh?
We're paying it.
Yeah, they didn't pay you anything for it. So what's the issue price? 0. What's the redemption value? $100,000. What's the original issue discount? How much did they withhold?
Should we get into the interest or the down payment with that original issue or not?
Say it again.
If they're withholding just the $100,000 amount, but now they're charging us as creditors for the down payment and the interest.
Right.
Is that something we can get an original issue discount for also? Is there a way to create?
Well, remember, the payment in the form of a promissory note, that's an original issue discount that you're due, right? That they're withholding your security. Yep. However, haven't you been like a sucker making payments?
Yeah.
Okay.
Yeah.
So all those payments you've made, where do those fit in? They don't fit into this ledger. They fit into your other ledger.
Right.
Because you're writing checks out of your other bank account. See, this has to do with the mortgage company, these ledgers. But your ledger with your personal bank, remember, everything that goes out. So all the payments that you paid in on your house payment,
you're getting the interest
you just get it back from your OID on that bank account.
But
you don't mention the mortgage company. The mortgage company has nothing to do with the payments you made. And neither does the note.
Right. So technically, roughly technically, you're getting the original issue discount back, the $100,000 from the mortgage company, and then also the 1099 OID from every payment you've made out, or at least just because there's a way that it's overlapping is what I don't.
All right. Run that by me again.
So if, for example, this is the mortgage company we're talking about,
right?
And we want a 1099 OID the mortgage company for the amount of the $100,000,
right?
And close the account.
Okay.
We'll close the escrow account, so we're getting the $100,000 back because the escrow
you can
account,
close it. Back. If you closed it, you come over here and you grab this asset. There is no more liability.
Okay.
Right?
Right.
Okay. So if you file an A on this, there's no more account. You don't owe anything.
Right, but say that's 3 years.
But you also want to get the money back on the promissory note? You
can. But yeah, however that overlaps, because say you paid your $100,000 and it's been 3 years, so you're like, okay, I want to get that escrow account closed and the money back from the mortgage that I've, that note amount. Say it's $100,000. Plus, I've now been paying out mortgage payments and interest and all that stuff every month, so you 1099 OID the bank as well.
Right.
For those payments?
Everything that goes out of your bank account
right.
just gets reported on 1099 OID for your bank.
Okay, but that's separate from the mortgage company.
Yes.
Okay.
So realistically, the only OIDs you would ever fill out would be for the bank for your checking account, the bank for your credit card, and if you have multiple credit cards and they're with different banks, there would be one for each.
Yep.
And then if you have a mortgage that you put a promissory note on, it would be the one for the bank that
bank with the mortgage
that you lent your money to. Yeah. Did you have a question? No.
If you had a corporation, can the corporation do this whole thing instead of the person?
Okay. The corporation doesn't have the ability to create a security. Who creates the security for a corporation? Yeah, the trustees of the corporation, right? The various officers, agents, those are the ones creating the credit.
So I wrote out $1 million worth of checks out of the corporation.
Right.
Is that me?
Yeah, it would be on your 1040. The 1099 OID would be with you, not your corporation.
Wow.
Because you're authorizing the creation of the funds.
Yeah. Well, there was $1 million deposited, and then I wrote out the checks.
Yeah.
So I can OID.
Yeah.
Personally.
That's separate from your personal bank account.
Yeah, it would just be its own OID because it's a separate account. Even if they're at the same bank, you'd have to fill them. If you read the OID instructions from IRS, if it's more than one account at a bank, that's what that account number box at the bottom of the left-hand side is for. You put if you're reporting the amount on your business checking account, then it would go down there in the account number, the actual account number.
Okay.
And then, if you guys want, we can go over the details of the form. Any more questions about the flow of money?
Well, I have a question about the mortgage. You're saying when you usually sign, say, a mortgage, they'll have the amount of the loan, but then they also show, like, in 30 years it matures to such and such, and it's. So how does that play into this? Because when you sign it, are you signing for the amount of the house being sold or the mature amount of the loan? Are you creating that also?
Realistically, now this is my own opinion. Okay, I'm going off of the Federal Reserve documents here for a minute. I believe that initial 100,000 has nothing to do with the note you signed. It has to do with the credit application. It has to do with the credit application, because what happens is they come back and they go, oh, you got approved. What happened was they just got money. They just got paid. But they want to try to trick you into paying something totally different, and they want to get as much money out of it as possible. So they come up with the whole down payment, and we're going to have to add more interest, right? You know, we had to add a couple points of interest to it. And so they start changing what the actual application did. The application goes and grabs the funds necessary for the purchase of the house. The note, with all its interest and all that other, I believe that that's a separate security. Maybe not. They may be tied together. I know the application is a necessary part of this, though, because it's the application that has your Social Security number on it, and that's what's generating the credit. So without the application, the instrument becomes worthless.
I have a great question. Well, at least it's for me anyway. Okay. So you know the practice of buying and selling people's debt right now.
Right.
So if I signed over for a settlement company to buy $120,000 worth of debt, corporate debt for a company I was closing, my signature allowed them to buy that debt from me.
Somebody came and bought the debt from you?
Well, they took over all that debt for me, and
but it was your debt originally.
It was mine, right?
Okay.
Right.
Okay. So you assigned it.
I assigned it, but there was this whole legal thing with this signature thing I had to do online to make sure the signature was legit and all this stuff, right? And this has been like 5 months ago, and I was supposed to pay them like $300 a month to manage and negotiate my debt eventually for me, right?
Right.
And they said it may take up to, a year or so because it takes a while, and your account's going to build in our bank account, and eventually all the accounts will be closed for you. And I haven't heard. I've actually stopped paying because I was going to write them a letter should they say I'm late on my payments, because I started learning about this. It's been 5 months. I've not paid them $300. I'm wondering if they used my signature and had the power of attorney to actually OID my $120,000 within their 3-year period, since I abandoned it.
Right. Actually, everybody who's a member of the United States has the authority to use your credit. Anyone with a fiduciary capacity. They use your credit all the time. You just didn't know it.
So good for them.
The county uses your credit.
Yeah.
Whenever you receive a bill that has a payment coupon at the bottom, they actually used your credit to generate those funds in an asset account. What they're telling you is, here's the payment coupon if you want to send us the liability to fill it. And if you did a banker's acceptance on that payment coupon and sent it in, what they should do, I'm not saying they will do, but what they should do is get rid of the asset. Or you could just file a 1099-A on that account, but if it's your electric account, you probably don't want to do that, because then electricity will disappear with the account.
Right.
That's not a good thing. But if it's an account that isn't a necessary or you want to close, by grabbing the asset, because it's your credit that creates these assets. Okay, here's something I didn't mention that I probably should have. No entities, public entities, can create credit. Only you can. Okay? Only people with signatures can create the credit, and that gives the banks the ability to create the liability on their books. But you're the one always depositing credits, always giving up the credits. They come back with the liabilities. Asset, liability side of the account. They're always over here. And you're always creating this over here. But all you spend in public is what's over here. So this is the debt side, and this is when you get Federal Reserve notes or you withdraw from your bank account, it's coming from over here. The asset doesn't get touched.
So I have the right to find out whether they actually 1099 OID'd on those accounts worth $120,000.
1099 OID'd on those accounts. They couldn't have OID'd them because they didn't.
They just sold them.
There was no original issue discount that they created.
I'll OID them. Okay.
Well,
Maybe.
OID who?
The bank that took my credit over, that took all my credit debt, corporate debt.
Did they? Okay. Let's think about this. Okay, so
I opened an account with them.
So they have, but you have a liability with them. You have to pay, right? So all you can OID with them is the $300 checks you're writing, and you would OID it with your bank.
Right. So what happened to the 120? It was
I mean,
it was literally
you can go and close all the accounts.
Yeah.
That's the only thing you can really do with those. Whatever they're doing with it, you have no evidence of what they're doing, so I wouldn't put it on a tax form. That's another thing that a lot of people are saying out there. Oh yeah, just fill out a 1099 OID for it. If you don't have any evidence of something happening, then I wouldn't fill out a tax form on it.
All I know is it disappeared, and I'm just wondering. So I get that it's on my
yeah, but
accounts,
the accounts could still be open.
Okay.
So you could go through and close them.
Yeah.
Filing a 1099-A on them with box 5, which is debtor needs to pay this back. I'm paraphrasing, but that's what box 5 is. Check it no.
Got it.
Okay.
Okay.
And if you check that box no and fill out the 1099-A properly, you acquire the asset that's holding that account open. If you acquire that asset, the account closes. They can't hold a liability. Remember, you're the only one who has the ability to create credit, and the only way they can hold an account in public is if this asset's over here. Now, how many of you are going to be blown away when you realize that this is exactly how the courts work too? Except the judges or the bankers.
Just a quick question about what she said. So could technically she ignore the credit consolidation company, 1099 OID her bank account for the $300 she paid them?
She would add one more 1099-A.
Okay.
For the debt consolidation company, because they gave you an account number, right?
Yes.
They said, here, we send you a monthly statement, and it's got an account number that didn't exist until you made a deal with them, a contract. You did create a security, and that asset is holding open that account. So you would have to do an A on that account, and it would grab that asset, and it would close the liability.
But it also computed for me and added up the maturity amount of the loan. They actually went out 22 years. If I don't pay them anything, what I'll actually owe them in 22 years or whatever, right?
Yeah.
So
it's meaningless.
Yeah. Okay.
If
they have an asset now.
Yes.
Well, but here's
your security. Whatever you put your signature on is the security.
I think that's my next business, but yeah. I'm serious.
But just to be clear, so she can 1099 the bank for the money she paid to this credit consolidation company.
Right. On the bank.
Says on.
For the $300 payments. Yeah.
Okay, and then but she'd also 1099 the credit consolidation company, is what you just said.
The same thing.
No.
What did you just? Okay.
And a 1099-A on it, not a no ID.
1099-A on the consolidation company. As far as the credit cards that she gave to the consolidation company, could she then 1099 OID those, or does that up to then the consolidation?
Probably could.
To close
because
those.
the accounts are probably still open.
Right.
And there was original issue discount with every transaction you authorized on those credit cards.
Right.
But that's separate from closing it. You might want to do the OIDs first and then close it, so that the IRS has some books to look at. Because if you close the account and the IRS goes to look for the books,
well, okay, I
what
guess.
account are they talking about?
What's the difference between 1099 OIDing those credit accounts versus closing them? That's what I guess I'm missing.
What's that?
The difference between 1099 OIDing each credit card account, like
all you're ever OIDing is your transactions that go out of your accounts. So
Only the bank,
when you
not
use
the
your
credit.
debit card, when you write a check, when you withdraw cash, when you use your credit card, those are all OID events. When you're...
Well, let's say, for example, you have 2 credit cards, and you write them checks. Those are all still through your bank.
That's through your bank.
Okay, so you don't need to worry about the credit card companies at all.
No, not the payments you're making to them. Because the payments you're getting back from your bank because it's the bank that's withholding the original issue discount with your credit card payments.
Okay.
When you use the credit card, that's when you would OID the credit card company.
I guess if you paid the credit card companies cash, then you would OID. No, you're still taking it out of your bank.
Yeah,
okay.
It's still out of your bank. Yeah.
You got less than 10 minutes.
I wanted to know if for dependents that you're claiming on your income tax, they have a job, they're working.
Right.
Who gets to do that? Should the children do that themselves, or I'm not sure.
Oh, you mean, okay, so the children have bank accounts.
Right,
And
and
you're
they're
declaring them as a
working.
dependent.
Yes.
It's really something only they can do. Because
Okay.
only they can authorize the creation of funds out of their account. Are you a signer on their account?
No.
Okay. So really, if
Okay.
it has anything to do with their account, then they're the ones authorizing the creation of funds. So
Okay.
they can OID it on their 1040.
Right.
But you're not in the transaction.
So
Okay.
Make sure she understands that she's taking deductions.
You're getting way ahead of yourself. Oh,
I found a little flaw here. So if my bank account is closed from that corporation,
right?
Can I still 1099 OID the closed account?
Has it been less than 3 years
Yes.
since those securities were created?
Yep.
The securities are still there. And the account's not closed. Just your access has been cut off. Okay. All right, so real quick, I wanted to give you an example of the same ledger. Now, let's say you're a true debtor, and not only did you refuse to pay your credit card off, but you refused to pay the collection agency they passed it to after that, and now it's in court. So now the attorney for the collection agency files a complaint for money in the amount of $10,000. What is the asset in the bank? A court, by the way, a court is a bank. If you look up the definition of court and bank, you'll find court in bank and bank in court. It is a bank. You're in a bank. And everything's commercial, so they're treating it like banking. So, does anyone know what the asset is that opens up the liability that they're going to try to attach to you? What's the asset that creates the liability that they're going to try to attach to you, the defendant? The complaint. The original signed complaint. The original is, does anyone know where the original complaint is held? Where in the court? Because you're an attorney. When you take in a complaint, you file it, right? They keep the original, though, right? Where does that original go from there? Judge's chambers. The judge has a vault in his chamber, and it's a vault, and it's because these are worth money. They are securities. So the judge is holding the security. So if you file a 1099-A on the asset and you acquire the asset, the liability goes away and they can't attach it to any parties. Simple accounting. Okay? Go ahead. Oh, microphone in the back. Who's got the microphone? You guys can't see, huh? Yeah. I'll try one of the new ones.
I was wondering, when you do that and you 1099-A that in the court, is that all paperwork before you even get into the courtroom? Is that something you file ahead of time, or would you do that?
It's something I would file ahead of time. Well, unless there's no amount. I mean, I've seen cases filed where they haven't attached an amount to it yet. Then it's a little tricky because there is a security sitting there, but because the amount hasn't been put in there yet, you don't know what to claim. You could. And the rule of thumb is $300 million.
Yeah, should cover it.
Yeah. So $300 million should cover it. If you've got multiple federal felony criminal charges, you would actually be talking about a lot more. Probably $400 million per charge.
In order for a check to become a security, you need 3 things on the check, right?
What are those?
One is a signature, and there's 2 other things, isn't there?
Okay, so we're talking about a money order, really, because all negotiable instruments are money orders. So, what's essential on a money order? Oh, that's a good one. You guys got one. It should actually be above the line I'm writing. Okay, so put date, the issue date, date of issue. Date. We'll say Jan 15th. Not me. 2009. Okay, what else? Accounts. We'll put the accounts at the bottom.
The two signatures.
Two signatures. Why do you need two signatures on this instrument? No, we're just talking about the most basic negotiable instrument.
Signature.
Signature. Okay, well, we'll do pay the amount first. Pay $10. And then you'd write $10. Right? Okay. Who's it going to? Pay to the order of. Pay to the order of. And Todd. He was the first one to claim the abandoned property. Okay. Account, somebody said. Memo. 1, 2, 3, 4, 5, 6, 7, 8, 9. And signature. That's all you need. That is a money order. So whenever you hear me talking about money orders, I literally will write one just like that. Doesn't need to be any fancier than that. Date, pay this amount, pay it to this guy from this account. There's my signature. I authorize the creation of credit, just like I do when I sign a promissory note. You're just authorizing the use of your credit to create an asset. What about a traffic ticket?
Or a traffic ticket?
Yeah, when you sign a traffic ticket, it's a money order. A traffic ticket is a money order. It's an order for money. What is a law called before it becomes a law? It's a bill. Okay. Yeah, if you guys want to, like where the audio downloads for the classes and stuff will be, it's on my website. And that's great. It's creditorsInCommerce.com. Also, you guys will be receiving, everyone who's signed up on the list, you'll be receiving an email inviting you to have access to our private network. And in the private network, there's tons of educational type documents that I recommend that I feel aren't too misleading. Again, not everything's 100% right. I'm putting it out there that there is nothing for you to get out of those documents. There are no tricks. There are no special documents. There are no special words that you're going to know or memorize that are going to make you a creditor. Being a creditor has nothing to do with the technology, has nothing to do with these forms, has nothing to do with the commercial process. Being a creditor comes from being a creditor or being that giving in life in general. I stress that it happens at the spiritual level first. If you're not coming from being a creditor with all the people in your life, it's trying to do it in commerce is going to be an exercise in futility. Because you're automatically going to fall back to controversy. You're automatically going to fall back to adversarial proceedings. You're automatically going to put up defenses. You're automatically going to take a position. And these are all things that debtors do. Being a creditor means being able to come from any given moment to bring a resolution. So no matter what confronts you, no matter the degree or the intensity of the controversy, it is within you to bring the remedy or the resolution. And that's what we're advocating more than anything else. Like, yeah, these are neat technologies and it's neat to understand the accounting and the economic system. But realistically, this is a very, very spiritual venture. If you're not a creditor in your heart, this won't go well for you. It's going to be a bad experience. Okay? So I'm just, there were a couple people outside approached me. They didn't have the benefit of being here at the first class. So I wanted to maybe put down a little more foundation. I think we're kind of moving into it with discussion of creditor. Is there anything that anyone feels that maybe we discussed at the first meeting that they didn't quite get and that they had a question on? Microphone?
It's actually not that I didn't get it. I just thought it might be
really relevant.
Yeah, it wasn't that I wasn't.
Is it on?
Sure, yeah, it's on. Well, hold on a second.
It wasn't that I didn't get it. It was just something that really made a big difference in the way you began the program, which was talking about the history of bankruptcy in the United States and the sovereignty of 7 years of sovereignty, and then like every 70 years that, and then also bringing the biblical element of it. That really laid a huge foundation, I think, for me in the first class.
Yeah. So one of the best resources that I would consider for commerce is the Bible. The actual Bible is the commercial manual for everything that's happening. For everything that's happening in commerce. It's basically a manual. Your civilization is based on it commercially. So we can go into a little bit of history. I don't want to touch on the stuff I already did, though. That seems. Yeah, there are audios and videos available. I just want to make sure that they get something out of the rest of this class, if there's something foundational that we can put in here that'll benefit for their understanding of what we're talking about.
I think what's great is you showing, that the law of commerce is the number one law, the tiers, just like what you started off with.
Forms.
Just that basic, foundation.
Okay. Yeah, we'll do law forms and jurisdictions. Actually, that's a great place because without understanding that, you really don't understand what's going on. Okay. So there's a pyramid of law. Okay. The top of the pyramid is what I would call natural law. And natural law is what makes it possible for your various elements of the earth to come together and form the experience that is you. Okay? So there's first natural law. From natural law, you get things like human beings and cats and dogs and things like that. As soon as human beings started interacting with each other, that created the second highest form of law, which is commercial law. Why do you think that that's the second? And actually here, I'll give you a great example of when we transitioned from this to this in the Bible. In the Bible, we started out with natural law in a non-commercial zone known as Eden. There was no debt. There was no commerce. Okay? However, God gave the law. And one of the laws was that if you eat from this tree, you will surely die. Okay? And at the moment they ate from the tree, did God kill Adam and Eve? No. They immediately traversed into a new jurisdiction. And that traversal created commercial law. And not only did they traverse, but it really was the foundation of what we call admiralty law. Okay? Because in admiralty, you can discharge a debt. There is no execution on a contract in admiralty. Okay? in what is commonly known as common law and law of the land, there's always execution on the contract. Whereas in admiralty, there's discharge of your debts. So God gave them the option to discharge their debts with the blood of animals. That was the money of account that he accepted. Oh, we didn't go into money of account, money exchange. It's actually money of exchange. Okay? Your current forms of money of exchange are Federal Reserve notes, checks, credit cards, debit cards. That's money of exchange. Okay? When you write a promissory note, it's a credit instrument and is money of account. Okay?
Say that one more time. When you write
A promissory note and put it in, that's money of account. Okay? So basically, they were given the opportunity to, and rather than die for their sins immediately with execution on the law, the option to discharge their debts. Now, does discharge get rid of the debt? No. It sets it off to a future date. Okay? And that's what you're doing in commerce right now. You never really pay anything. You're always discharging a debt. You're offsetting you're discharging the debts and your sins to be paid for at a future date. Okay?
That's not how we got the problem in the first place.
So then the next on the pyramid, whoa. I guess would be common law.
Where's admiralty law? Is that commercial law?
It falls into both of these, actually. See, admiralty is more of a jurisdiction, not a law form. But admiralty is where we've operated in and out of admiralty throughout history. Admiralty became really popular in the 1500s when we started sending ships out across the sea, and things like insurance and stock and all forms of negotiable instruments. That's really when admiralty came into being the common law. And it was officially declared common law by Lord Mansfield in 1753. He said basically, yeah, admiralty is part of the common law now. There's too much of it going on for it to not be considered common law. And then, as through the 15 and 1600s, they realized during this spiritual evolution of humankind that all people are vessels in the sea of space. And there's no more appropriate law form for vessels in the sea of space than that of admiralty. So they basically, your body's a vessel, but you are not your body. You're the captain of the vessel, but you don't physically exist in this world.
Is that what Jesus taught us showed us when he walked on water?
Walking on water, I would say it's also a metaphor for having a command of admiralty. I walk on water, I don't sink.
Can we be spaceships instead of boats?
It's a vessel. I didn't say anything about it being a boat. You associated it with a boat. Okay, so after common law, next step down on the ladder would be good old, I'm thinking, statutory law. Now, statutory law, well, first, actually, we didn't really go into common law too much. Common law is like a group of people get together and decide this is how things are going to go, and common law is also how things have been done in the past. So common law is kind of an amalgamation of what we generally agree as a society and how we've based our judgments of commerce in the past. So that's really common law. Whenever you hear like reference to past court cases, they call that case law. That's part of the common law. It's not that it's necessarily written in a book anywhere. They're just saying this is the maxims of law for our society. This is generally accepted. This is how we do it.
Eye for an
Eye for an eye. Common law of the land. See, now because common law has kind of been mixed with admiralty, you've heard of the law eye for an eye. Okay? And that was the old biblical law, the Old Testament, the old contract, which was execution of contract, which used to be known as common law, but now because common law involves admiralty, it's to distinguish between the two, we'll call it law of the land versus admiralty. And the law of the land was when you owed, you paid. You couldn't discharge it to a future date. It happened now. If you can't pay now, well, then you're working for me. You become my involuntary slave until the debt is paid.
So then that would be part of natural law or natural law forms? Is that the jurisdiction of natural law forms?
No.
Okay.
Law of the land? Law of the land is a common law. It's
Okay.
what we decide as a people to participate in.
Common law would then have two subdivisions, law of the land, law of the sea.
Possibly. There may be more to it. But you could divide those up, but you could also do the same with commercial. And then statutory law is laws recorded in code, in statute, in the various, let's say you get a society of people or an association of people, and let's call that association of people the United States. The United States decided that we were going to publish the general guidelines of operating within the United States, and we call that the U.S. Code. And then each of the states have their own code forms, and we've got government code and tax code and all these different codes, and that falls really way down here on statutory law. Now, because you have unlimited right to contract, you originally were up here in all your dealings with people. I mean, really, the original jurisdiction is up here, but contract doesn't happen up here. As soon as you get into contract, it happens here. Okay? Exactly. Interaction even. Doesn't even involve language. Because if it's really contract. See, people think a contract is written or signed.
That's the last language.
No, that's just a memorialization of the contract. Right. Contract is by agreement and is by performance. If I say to you, you're going to pay me $20. Anyone hear a rebuttal? No, she just agreed to pay me $20 because she didn't respond at all. The fact that she stayed silent means that she agreed. That's a maxim of law.
Isn't that like an invisible contract?
Yeah. But again, remember, contract is strictly by performance. If you're accepting a benefit of the United States, you're in contract with them, whether it's signed on a piece of paper or not. The fact is, you're operating a trust known as a U.S. citizen, and that trust receives benefits from the U.S. corporation, and because you're accepting the benefits, you've agreed to be part of these laws right here, or to act within the bounds of those laws. They didn't have to get you to sign the statutes. That's the application for live birth. They're saying, hey, there's this new commercial unit in the world, and we need to get it a berth, B-E-R-T-H, in admiralty. It needs to be able to sail the seas of commerce as all the other vessels can and do business. Can you please register our vessel? They said, sure, we'll register your vessel. And they gave you a birth certificate. Okay? And then the last form of law, I would say, is political, or the lowest on the totem pole. It's political law. And the example I used last time was soccer. Soccer, and the reason I like soccer is because, one, I play it, and I loved it, and I played it for my whole life, but I also refereed it. Being a referee in soccer, you're trained to be a judge. And as a judge, you're only concerned with the laws of the game. However, not one of the laws is black and white. It's all interpretation, which is exactly what you're dealing with in the courtrooms. That's why things never quite seem to go the way you think they're going to go, because the judge is a referee. He's looking at your intent. He's looking at your action. He's not only looking at the act, because the act could be harmless. Whereas if the intent is harmful, he's looking at that. And remember, I used the example of Solomon, King Solomon in the Bible, when the two women fighting over the child came before him as the judge, and his only responsibility is determining who's the creditor, who's the debtor, because the creditor is going to get the remedy, or the creditor is going to get the benefit of his decision. Because the creditors win, debtors lose. That's just how it is. Creditors control, debtors are controlled. Okay? So he said, how about we just chop the baby in half? And the one lady's all, no, don't do that. Give it to her, that's fine, but please don't cut the baby in half. She can have it. Who got the baby? She did. Because she was willing to risk it all. She's a creditor. Creditors are willing to risk it all. Okay? So, yeah, she brought resolution. She brought the remedy. Yeah, so that makes her a creditor as well. So you see that being the creditor isn't always the one who brings money. You bring remedy, you bring resolution, but it doesn't mean you bring Federal Reserve notes in your pocket.
I have a question. You said judges are the referees.
Yes.
Isn't that in a perfect ideological world?
Yes, because really they're bankers in our world.
Right. Well, so but like for example, in the Winston Shrout stuff, if you call which jurisdiction they're in, you can actually, being a creditor, you can ask them what jurisdiction they're operating in, and it will force them to own whether being a referee or a banker. Isn't that I'm not being rough about it.
But do we need to go there? Because no matter where they're at, we're there as creditors to bring a resolution. So if they're there as a banker, good. Here's my money order. Take care of this. I'm out of here. Okay. If he's there as a judge, well, I'm not there to argue anyway. So here's my evidence. I agree and accept everything they say. Here's the remedy. Or here's my evidence. But if you're going in there for controversy, adversarial, anything to oppose anyone in there, you're a debtor. And you're going to lose.
Even then.
Yeah, and even then. Okay, so let's do a little what I like to call jurisdiction A, jurisdiction B, because I always talk about that, but I know that it's because I've listened to so much Jack Smith. To me, it means something, but to most, it probably has absolutely no meaning. Okay. So, jurisdiction A would be the equivalent of de jure. Jurisdiction B would be, and there's actually a space in there, de facto. Jurisdiction A would be the republic. Oops. Jurisdiction B would be the democracy. Come on, work with me. Jurisdiction A would be, what's another way of breaking it down? Private. Jurisdiction B would be public. Yeah, well, that's the trust. We could do a breakdown of the trust again, too. All right. So, jurisdiction A, which is where the United States originally, in 1776, existed, we'll say. Okay? Now, since then, everything that's public or part of the government is over here in jurisdiction B. The only remnants of the republic in jurisdiction A, post office, secretary of treasury, and really the post office is on both sides. Well, actually, the post office is over here. The postal service is over here. The Secretary of the Treasury, the Secretary of State, and the Attorney General all sit over here in Jurisdiction A. They actually had to expatriate their citizenships to serve in those positions. And it's because they're the last remnants of the Republic.
That's the exemption of foreign sovereign. Sorry, I'm screwing it up. Isn't that the Foreign Sovereign Immunities Act? Is what they did for A is to become expatriated?
No, they just expatriated. I don't know if it had anything to do with the Foreign Sovereign Immunities Act, because their positions have existed a lot longer than the Foreign Sovereign Immunities Act. So the Foreign Sovereign Immunities Act has to do with foreign sovereigns, but what's a sovereign? Anyone know what a sovereign is? It's actually really simple. Are you taking a position that anyone can take those things away from you? Or that anybody has control over you?
No. No.
Okay, so
originally, no.
Okay, well, are you
sovereign
suggesting that now that you don't have that?
Ask me the question again. Ask it again.
Give me your answer again.
Okay, so sovereign is free, emancipated from myself and others.
Free from others.
Yeah.
Okay. And what is evidence of that? What demonstrates that?
My will, my knowledge, my faith.
So don't you always have your will and your knowledge and your faith?
Yep.
No matter what?
Yep.
So what makes you a sovereign?
Isn't it free from the system that was created to...
Who created it?
Our environment, our city, or wherever we are functioning, created this system that we have to supposedly follow. So when we're sovereign, we don't follow that, but we also can benefit from that.
Who created it, though?
Man, people.
Aren't you one of those?
Yes.
Okay.
But sovereignty in that sense, is that what you're talking
are you
about?
saying your creation controls you?
Yeah.
Are you taking a position that your creation can control you?
Yeah. In this case, yes.
Okay, so you believe that your creation controls you. Okay. Sovereignty. So being a sovereign would be not being controlled? Is that your position?
Yeah, not being controlled.
Okay. Basically, my simple definition of what a sovereign is in control. You control your property. If you don't control your property, you're not sovereign. If you don't control your property, somebody else does. So what's that make you? Debtor in possession. Right? Right. So you're debtor in possession, so you really have no sovereignty. Sovereignty is just about control. Do you control your life? Do you control your body? Do you control the things in your life? That makes you sovereign. And you have absolute control. We like to pretend like we don't, because that's a whole lot of responsibility when you look out at the world and you say, oh, this is what I created. This is what I'm responsible for. And that's why it's really easy for people to go, no, it's the devil, and it's the Rothschilds, and it's the Bushes. And well, I mentioned a couple of them.
So own no thing and control everything?
Own no thing and control everything. That's being truly a sovereign. So, how many people think Rothschild controls the world? What? Good. Because he doesn't. He's chosen to take a much higher level of responsibility than all of you, but that's it. That's the only difference between you and the Rothschild family, is that they take a very high level of responsibility. That's it. Same with the Queen of England. She takes a pretty high level of responsibility. Pope, high level of responsibility. Brandon?
What were the three secretaries? There was the Secretary of State, Secretary of Treasury, and what was the other one on the A side?
Attorney General.
Attorney General.
And I mean, we can go into that and how and why they are what they are and how they operate. But easiest way to put it is they're foreign agents. And jurisdiction A is always foreign to jurisdiction B. And jurisdiction B is foreign to jurisdiction A. However, B was created in A. So B is the creation of A. Can a creation control its creator? No. So ultimate control in commerce comes from which jurisdiction? A. You can't control over here in B, because B is a creation of A. So B is always controlled by A. So who controls the country? Who controls jurisdiction B? Creditors. The creditors. And who represents the creditors in the United States? Secretary of Treasury? Yeah. Secretary of State? Attorney General. They represent the interests of the creditors. Who's the IRS collecting money for? Creditors. Do creditors pay taxes? No, they get your taxes. Yeah. You pay the taxes, creditors receive them. Creditors don't pay taxes. And when you learn to be a creditor to the United States, you'll never owe them another tax dollar again. They'll be paying you big bucks because they'll be returning your principal. That's their job. They're there to work for any creditor. That's the beauty of it. IRS is your best friend. Love them. Because if you're a creditor, they're out there working their butts off for you. Revenuing. That's the internal revenue service. They're revenuing from private to public, from public to private. That's their job, moving the funds from one side to the other.
Just a quick question. Is the reason that Secretary of State, Attorney General, Secretary of Treasury, foreign agents, is that the way that they can then communicate with jurisdiction B because they've expatriated?
Well, if they can communicate with B before they expatriate.
But it's creditors and debtors that there's a gap in communication.
But everyone in B can communicate with each other, and everything in B is public.
Right.
So they were there before. So who couldn't
so
they
they
communicate?
expatriated from B into A.
Because?
So they could communicate because they're creditors, and because they can then.
No. They're not the creditors.
They're not.
No, they represent,
the creditors. Okay.
So they needed to talk to people in what jurisdiction?
B.
No, where are the creditors at?
Well, A.
So that's why they had to get out of here. They had to get out of B. But they can't interact with these people over here.
Okay, but
they're
B who became A, but then they can communicate with both.
Right.
Okay.
But they'd actually, if they were over here and in acknowledging what's over here, they could be hung. That's why a judge in jurisdiction B can never recognize jurisdiction A because he's committing treason against jurisdiction A. Okay? Right. So that's why you can't bring your private process into a public hearing and expect anything to happen, but you're delusional. Because he's protecting everyone in that room. His job, the judge's number one job, protect the public. And if you go in there and start talking about stuff over here, yeah, he ain't going to listen to a damn word you say, and he'll probably throw you in jail real fast because you're damaging the public. He can have you can say something that gets if he says the wrong thing, him and every attorney in that room could be hung.
What was that acronym?
Hanged.
What was that acronym we had with people like something reality disorder or alternate reality disorder?
Right, alternate reality disorder. Yeah, you walk into jurisdiction B talking about jurisdiction A, you have what they now call alternate reality disorder.
Was there a year that these Secretary of State, Treasurer, and Attorney General was required for them to expatriate themselves? I mean, was that always from the beginning of our country?
No,
or was
it wasn't
that
from the beginning.
Like 1933?
It would have either happened in 1859, the end of the first bankruptcy,
right,
or 1929, the second bankruptcy. See, in 1859, who lost their sovereignty? Well, let's go back to the first bankruptcy. Who lost their sovereignty in the first bankruptcy?
The entire country.
The national government. No, not the entire country. The national government, which had just been created. It was only 7 years old. Yeah, 1782 was when the national government was created. Actually, you may consider, officially created in 1782. 7 years later, no one would pay the debt. They went into the first bankruptcy in 1789. International bankruptcies run for 70 years. Fast forward 70 years, we get to 1859. What happened in 1859? The Civil War. Who lost their sovereignty? The states lost their sovereignty during the Civil War. So it may have happened then, but probably more likely it happened in the beginning of the third bankruptcy in 1929. Follow the stock market, the New Deal, and you're about to get a new Deal. And this New Deal isn't going to be as good as the last one, if you consider the last one good.
I was just going to say, okay, so 1859, the states lost their sovereignty?
Yes.
And then in 1929,
the people
lost their sovereignty.
The people lost their sovereignty in 1929.
19...
But they gave you something in exchange. Remember, they can't just take something from you without giving you something of equal or greater value in exchange. And they gave you the power to create money.
Okay.
They said, we're taking away all your legal titles, which creates what? Fascism. If the government has all the legal titles, that's fascism. However, they gave you something in exchange. They said, but you're in charge of creating all the money. So we're going to take away your gold, we're going to take away your silver, we're going to take away your legal titles, but here's the benefit. You get to create all the money.
To become bankers.
Yeah.
So then in 1999.
1999.
Who lost sovereignty?
1999. Well, I don't know. We're moving into a new Deal. I guess we'll see. But I don't imagine it's going to get any better for the debtors. It's not going to change for the creditors because it never does.
I think we lost who we are.
Well, if you're a creditor, no matter what stage in history you're in, you're a creditor. And none of those bankruptcies or fictions or insolvent entities have any effect on you. You operate outside of them. You're feeding them. You're the one helping them out. You're coming with the solution.
But I think I think in 1999 it became a spiritual loss.
You think
no, really,
so?
Like
spiritual sovereignty?
People losing who they are.
Well, what did we lose? What did we lose
there.
control of? Realistically, I think probably what happened in 1999. I think you got to look at what was really going on with the Clinton hearings, because it probably has something to do with that, because that's what was happening. Remember, in history, it always seems like something else is happening, whether it was their signing of the Constitution in 1789, or the beginning of the Civil War in 1859, or the crash of the stock market in 1929. Let's look. What was happening in 1999?
Well, the trade towers was shortly thereafter, too.
Right, they were, but that was probably more about destroying documents, evidence, titles. Because I noticed something interesting is the Queen lost her crown on Canadian money for a little while after the towers came down. She lost her title. Right? Doesn't the crown represent title? She probably lost some title documents.
Well, the Enron documents and the investigation supposedly.
Yeah, there was something there. But remember, War of 1812, when we refused to renew the Bank of the United States. Yeah, the British soldiers came over here and went into the federal courts because that's where we hold title. They wanted the titles. That's all it was ever about. That's what the Constitution's all about. We gave title to the national government to foreign creditors. And people want to stand behind the Constitution like it's a great document. It's a debt instrument. It's a negotiable debt instrument. That's all it is. It says somebody else, this country owes somebody else a lot of money. Yeah, and the states are the sureties because they signed on as sureties. Remember, each person who signed the Constitution was representing a state. When the states refused to pay the debt, they lost their sovereignty with the beginning of the Civil War. Then we became the sureties. Somehow, some way. Must have been the 14th Amendment, which created U.S. citizens. So in 1929, the people lost their sovereignty. No longer, and what's sovereignty? What is sovereignty? Control. So we can no longer control the titles to our property because they took away the gold and the silver, so we can't execute on contracts. We can't actually carry around portable property as money of exchange and exchange it for the legal title. State has the legal title to everything. We get the equitable title.
And the Federal Reserve is supposedly the fourth central bank in the United States history, right?
Yeah.
Okay.
Probably.
So how does
Sounds
that
about right.
affect, since it's the fourth one, how does that affect the bankruptcy that the U.S. has been operating in for all these years? Because there's been a, creation and a collapse of these, three other central banks. I mean, how does that play into this whole bankruptcy thing? Or did it affect it? Did it not affect it?
How did the bankruptcies affect the central
How
banks?
did the banks? How did the nullifications of these central banks?
The nullification of the central bank. You mean like in 1811?
Yeah. Well, there were three other ones before the Federal
Okay. Well, there was
Reserve.
the initial Bank of the United States was established in 1791. Had a 20-year charter, ran out in 1811. Was renewed though in when? Anyone know? Right around the end of the War of 1812. 1816, I believe. 1816, we get the second Bank of the United States. But then we got Andrew Jackson as president. He said, no, screw those central bankers. Get rid of that piece of...
Yeah, he killed them, right.
But less than 20 years later, we had it again. It was like 1836.
So what was the United States... Well, how was the United States operating in those 20 years?
In the Jackson era?
Right.
It was the first time in history we operated at a surplus and we weren't in debt. Go figure.
So we weren't bankrupt. We weren't.
But it doesn't mean that we weren't in debt, though. For all I know, Andrew Jackson paid off all the debt. But I don't think he did, or else we wouldn't have come to the point we did in 1929. I'm thinking maybe he was just being a belligerent debtor. And nobody likes a belligerent debtor. Belligerent debtors get their countries invaded, like Iraq. And I'm not saying I don't have anything against the Iraqi people, but it's their belligerent dictator and his commercial affairs that got them where they're at. It's not like the United States is some lone nut that invaded that country. That's a commercial decision. And the central banks and everyone else is right behind it. Because if we can't perfect a security interest in someone's country, if the rule of law is not the ultimate authority in a nation, then that nation is belligerent, and we cannot do business with it. We cannot allow it on the international stage of commerce because they're a risk. They're an uncalculated risk. We don't know what they might do. And they're not letting us hold titles. If they're not letting the foreign creditors come in and take title to things, then why would we want to do any business with you? If we can't secure our business dealings, then there's no point in us doing business with you. And if we lock them out and isolate them, that's going to be much more damaging to the people. You try to isolate them in a world community, in a world economy, and realistically, the way I see it, the evolution of human beings and the human race has more to do with us being one community. Like realistically, this whole idea of, go USA, I'm over it. I'm not a nationalist. I love my country, and I love the place where I live, and I love my community. But nationalism, it's a dangerous thing. Remember, all the Nazis were hardcore nationalists. Okay? So nationalism is a very dangerous thing, and I believe that the evolution of this planet is getting out of it. If we have no division among the people, and we see ourselves as one community, without division, without controversy, then we'll have what I believe to be a balance, at least.
Isn't that congruent with the loss of spirituality?
I don't think you can't. How can you lose spirituality?
Well, because it becomes a spiritual conversation. If you're losing that, it's not contractual.
Oh, microphone. It's gonna be me sitting here listening to silence on the video.
I'm saying, isn't that congruent with the loss of spirituality in 1999? Because there's not any paper or other person that is governing the loss. It's individuals reclaiming who they are. And as a result of reclaiming who you are, we're all one. And if you don't, you become sick or diseased.
I would say if the debt was not paid in 1999, what happens since they Okay, here's what probably happened. Remember, they took legal title, right? In 1933, we can no longer have legal title. And what, with the new bailout, is the government able to do?
Homes.
No, what can they do? They can buy, what are they doing with that bailout money? They're buying stock in the companies, right? So now not only do they have legal title, what else do they have?
Commercial title.
Equitable title. So now we've gone from fascism to communism. In a communist government, they control the equitable and legal title of property. So it looks like that's where we're heading. If we don't step up and be creditors, you'll have, you already have a communist country, but it'll only get worse.
I think Rome fell because there was just a lot of laziness, and the caterpillar finally burst, and I think it was an attempt to do it without God, and in a sense we're doing that now. We're attempting to operate as individuals without our own sense of God and our own sense of control over our own domain. So everyone's now looking to see, what can I do? I'm losing my house. And
everyone's been victims for all this time. We've all said, no, you do it. I'm not responsible for where this world is at. The government needs, it's almost comical to me how everyone thinks Obama is going to save the day. It's like, really? You really expect a politician to swing in and save the world? And it's funny because you look at a lot of the politicians who try, and I think Kennedy was a great president, but what he was doing, he wasn't looking at the bigger picture, because he was trying to bring back the silver standard and really trying to disrupt the commercial system. And if the rule of law isn't what's governing, and you don't want to be in law of the land and execution of contracts. You don't want eye for an eye. Yeah. Remember, we've got the New Testament, the new contract. And the new contract is everything's prepaid. There was no sin. There was no debt. Jesus prepaid it. And isn't it interesting that the symbol of Christianity is a freaking double entry ledger? Isn't that interesting? That's the symbol, is the double entry bookkeeping. We got assets, liabilities, and he prepaid your debt. So now we're dealing in a different system of commerce. We're no longer executing on contract. I say let the government have all the legal title. But you take control of the government. Stop letting things run amok. It's not because there's one guy who's sitting there with his computer or his master board with switches and levers and buttons controlling the world. I mean, literally, imagine controlling the world would be like trying to herd 7 billion cats. Okay? Attempt that. And that's about how much control you can have over the world. You can't control the world. Nobody can control the world except for me. Nobody can control my world. I'm in complete control of my world. And when I choose to disregard that and be irresponsible and step back into being a victim, completely disempowered. I have no power to make any changes to do anything. I'm standing back here as a victim to the world I created. A victim to my own limitations, my own belief that I have limitations. Yeah, your own jurisdiction. You're living out of, you're refusing to pay your own debts. Remember we were talking about being a spiritual creditor? Okay? Well, there's nobody harder on you than you are. And if you're constantly dragging behind you all those things that you can't forgive yourself for, those debts, those sins, you need to learn to discharge. Because if you can't get rid of those debts, good luck doing anything in the commercial world. Because if you can't step into being the creditor spiritually and giving, what does a creditor do? A creditor gives. If we got a world full of takers, what the hell do we have? We have a mess. Yeah, a bunch of takers. And that's why there's no balance. I'm not saying get rid of the debtors. We need debtors. Without debtors, there's no commerce. Commerce is fun, admit it. Commerce is fun. We like commerce. It's what created this great world around us. If we wouldn't have had all this fake money that they came up with, do you really think the world would be where it's at? No, we would still be in the Stone Age. The fact is, this whole hypothecation and creation of money out of your signature is what's made this world. And it's a great thing. It's just there's not enough people stepping up and taking responsibility and control of it. And that's an imbalance. That's all it is an imbalance. We work to balance it. As creditors, we're going to become creditors, and we're going to teach those around us to be creditors. We're going to bring it to balance. Yeah, we are. Because really, America was kind of, the debtor nation. From the very beginning, we said, fuck you, right from the beginning. Yeah, just like little kids. Yeah, and then, and here we had the opportunity to be a truly sovereign nation. And we blow it in the first 7 years of us being a nation. That's how childish we were. We were like, no, screw them. Debtors refusing to accept and pay. And that's really everything that we're going to go into. If the spiritual end of being a creditor isn't with you on all this, you're going to create your problems. You know why? Because you can't forgive yourself of your debts. If you can't forgive yourself of your debts, guess who's going to be punishing you for them? You are. You're going to create the situations around you to punish yourself for the debts you refuse to discharge. Right? So.
Can you outline kind of what the different steps we'll go through, what we'll cover over not necessarily, week by week, but just overall, like what we're going to cover?
Yeah, we'll discuss all the taxing, how to interact in Jurisdiction B. Okay, so we'll learn everything we can about the operations of Jurisdiction B. That includes the courts, which I said are just like banks, dealing with the IRS. 10 minutes? Okay. Dealing with all the different agencies that you'll be dealing with in Jurisdiction B. Okay? We'll learn titles, dealing with titles, taking legal title, how to establish legal title. Okay? Then we'll talk about the most powerful part of commerce, and I want to save this more near the end of the course because I feel like you need a very solid foundation when you start stepping into the power of commerce from Jurisdiction A. Because remember, I'm saying all it takes is for you to step up and be responsible, and literally when you find out how things work and how effective and powerful you can be, you'll see that you think there's somebody corrupt out there, then you take care of them, because it's that easy. And that's what I'll call loosely call it the administrative procedure, which is basically perfecting claims and security interests. That's all it is. When you learn to perfect a claim and perfect a security interest and liquidate, you can make a lot of stuff happen. A lot of stuff happen. It's really, you're unlimited. But we're starting with the easy stuff. And what I consider is like the Jurisdiction B stuff. That's why all the educational materials you're going to get are all from the government. Because they're the best. They're telling you how it works. They're not trying to hide anything. They put it right there in black and white so that you can, if you decide, take responsibility for this mess. But the fact is, we've all chosen to make them responsible. And when I say them, the politicians, their whole, I'm not going to make any judgments or take any positions on that, but they haven't done too great a job so far getting us where you want to be.
Aren't they just manifestations and mirrors of what we haven't dealt with?
Exactly. Exactly. Everything remember our list of what's wrong in the world? Exactly. That's what's wrong in us. It's what we're missing. You'll never see an end to war until you see an end to war inside you. And trust me, the war inside you is the worst war of all. I mean, the fact is, people join the military to go kill other people who are also over there to kill other people. The fact is, there's people who want to go out and kill people. That's what's in our world. Whatever the reason may be, there's people killing each other. I'm not saying it's bad. I'm not saying it's good. It's just what is. It's just the condition. Yeah, it's a balance, actually. Because if there wasn't complete freaking psychos out there, we wouldn't know what the opposite of being a complete freaking psycho is. Right?
Well, we will.
If there wasn't evil in the world, then benevolence would have no meaning. If there wasn't suffering in the world, joy would mean nothing. The fact is, there needs to be a balance, and there will always be a balance. Right now, as creditors taking responsibility, it's up to us to rectify the imbalances we see. And if you see an imbalance in the world, you have the power to adjust the accounts. And it's funny because I have a lot more of a spiritual message to give, but it coincides and overlays so nicely with commerce. And I know that's really what people want to know about. Because really, you already know the spiritual stuff. I'm not giving you anything new. That's all there. You know, we all know the nature of our universe, but the commercial end of it is where we make up these elements of lack. You know, we make up that there's not enough money, that there's not enough food, that there's not enough peace. There's too much war, and there's not enough of this, and there's not enough of that. So we create all these conditions by literally making them a distinction. If you make them a distinction, if you can distinguish something, it means it exists in you. Because if it doesn't exist in you, it's not part of your reality. Just like, I don't know how many of you have seen the movie The Secret, and how the Indians, when they first saw the ships coming over the horizon, they couldn't see them. Because it wasn't part of their reality. They didn't exist in their reality. So, made no connection.
I just wanted to continue the conversation. So, at some point, maybe 2012, I don't know, won't there be an end in the duality? Supposedly, it may be then, it may be sometime in the future.
What does that mean to you? What does end of duality mean?
It means that we do, like, because I think that we are actually creating that we have to have good, bad, right, wrong, you know, psychos, non-psychos, so that we can measure our good by the bad that's out there.
Okay, so
that's what I think.
So your position is that we can live in a world with only one side of the account, the asset side.
That's what I'm thinking. I mean, maybe as a possibility.
Well then.
Well, the end of duality. That's just one way to look at, like, what would that be like?
I suggest that it would be non-existent.
Okay.
That's like saying, yeah, we want light, but you know what? We just don't like darkness. Okay, so let's get rid of darkness. Does light exist anymore? There's no contrast. If you don't have a contrast, it ceases to exist.
No, I understand what you're saying, but isn't there somewhere in between where there's no emotional charge to...
That's just a choice.
Right.
You choose to give it an emotional charge. I choose to get pissed off about George Bush. Right? It's a choice. You can emotionally charge anything, or you could step up and be a creditor, and no matter what controversy faces you, leave your past behind you. Because the only time you're going to create a controversy or go to adversarial proceedings is when you're not leaving that bullshit, you haven't forgiven your debts. Because you're going to bring forward some past judgment, something that's going to make you a debtor in that situation, instead of just accepting it and bringing a remedy or solution.
Just a point, you talk about your message being mainly spiritual. What I get from, I'm talking the overall, I have to learn all of this other, is that you can observe the gender position, you can observe the physical position of, duality, but you rise above that and you live as a spiritual being, which, there's oneness there and there's wholeness there, but you are observing the other. You're not either denying it or blanking it out or being ignorant of it. You're accepting it.
A creditor.
And moving up higher. That's what I hear you saying.
Yeah.
Yeah.
Yeah. That's a very good analogy.
Thank you.
Oh.
Can I add something really fast? I always been referencing the Certainly Conversations with God. Actually talks a lot about the duality, and if you really the way it explains it in there is that God, or on a spiritual level, there's no denial of anything that happens, like she just described, because there is oneness. It is all, and so, but in order for all to exist, you're also what you're not, and so you can't get rid of the duality.
Yeah. Remember, somebody wanted me to put nothing on the list. I said, let's let the background be nothing, because I want a list of things here. And you can't have a list of things without the no thing in the background. And that's who you truly are, the no thing. That's why when you walk into a court and they say, are you the defendant? No, I'm not the defendant. The defendant's a trust. It's a vessel. It's got all capital letters. Well, you look like the guy on this ID.
What's your name?
Are you suggesting or taking a position that I am the photo likeness you see before you? Are you taking a position that I am fused or somehow inseparable from the body? Because in reality, you're the captain of the vessel. The vessel itself could be the body. That's one vessel. The trust is another vessel. And they have titles. But the no thing cannot be distinguished. You can't hold it out in front of you and say, that's me. That's who I am. What is this? Does anybody know what this is? What is this? Pen? Marker? Wrong. Wrong. Nope. That's what it is. Those are all words and nouns. Okay? The reality is, the distinction, the things that we distinguish, what we are is the thing making the distinctions. And the thing making the distinctions can't be distinguished. It can't be separated. You are God. You are the one. You just refuse to believe it. You like to pretend like you're not, because it's a fun game. It's a fun game getting down here and then wrapped up in all the drama, isn't it? Would you really want your life any other way? You may think you do. You may think you do, but guess what? If you had the option, oh, you know what? We need to switch tapes. Why don't we go ahead and switch? All right. If you had the ability to dream an entire lifetime every night, from birth till as old as you wanted to live to be, and it would be exactly what you think you want. After a few nights, you'd be like, after the first night, you'd be like, wow, that was great. It was exactly the way I wanted it. Everything turned out the way that I wanted it to. Right? But after a couple nights of that, you'd kind of get bored because you're like, okay, well, nothing really exciting going on because I know it all in advance. I'm planning it out before it happens, and that's not that fun. So tonight, I want there to be a surprise. Something that arises that I don't know is going to be there. And then you'd want there to be obstacles. You're like, yeah, okay, that was fun, but there's no challenge to it. So, what's that? Groundhog Day, exactly. Keep living it over until you get it right. Eventually, the perfect life in your dream would be the life you're living right now. That would be the ultimate of where you would achieve after creating this, doing this exercise with yourself of dreaming the perfect dream every night, because all the obstacles you put in your way are the perfect obstacles for you. They're there for you to get something out of it. They're there for a reason. You're distinguishing them and bringing them to the foreground for a reason. It's to learn something. You're your own worst enemy. You're the only one throwing up the obstacles. You choose to have the life you have. That's the power you have. That once you're actually taking that responsibility, and then, learning this stuff's actually pretty simple. It's like, okay, we all have free will and we can do whatever the hell we want. So let's figure out some of the minor details of some of these parties that I'm acting with, namely the United States and the state of California and all these parties who are out there, and I interact with them, and I just want to know how they work. Because if I know how they work, well, then I know how to improve them. Because if I have a problem with the United States, I'm like, United States, not all it's cracked out, or not all that it can be. Right? It can be more. It can be better. Which is just a judgment on your personal part, or my personal part. There's no truth to it at all. But if you don't like it, fix it. Because I'm right there with the people who want to put nothing is wrong in the world on the list. That's where I'm at. It's perfect the way that it is. Because the way that I see it, whatever imbalances I see, I'm doing something about it. I'm here with you now. And you're here. You're doing something about it. So you've chosen consciously that, you know what? I do have the power to change the world and make it what I want, and that's what I'm here to do and what I'm here to accomplish. And there's going to be the obstacles. You just got to learn how to navigate through the seas of commerce. And it's not as difficult as you may think. Microphone? Where do you go?
In the game of commerce, who's responsible for bringing remedy?
The creditor. Creditor always brings a remedy. That's why you ask questions. You've heard the saying, creditor asks questions, debtors answer questions or make statements. Because the creditor is always looking for a resolution.
So if you have two people, answering questions with questions, who's the creditor?
What was the first question?
So he who speaks first is the creditor, or he who asks the first question?
He answered. So you're the debtor and I'm the creditor in this relationship. Do you see what I did, though?
No.
I asked a question in such a way that it wasn't just a meaningless question. It made you go back and reconsider what you said. I'm not just saying, like, what are you doing? 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 Yeah, that's insanity. And I'm not saying that there are people out there who think that is being a creditor. I'm here to tell you it's not. Just asking a question doesn't make you a creditor. It's just like filling out your birth certificate and accepting it for value doesn't make you a creditor. Filling out some UCC1 claims on your straw party doesn't make you a creditor. Getting legal title to your house doesn't make you a creditor. None of those things make you a creditor. Forgiving debts and giving makes you a creditor. Bringing remedies, bringing resolution, avoiding conflict, or bringing a resolution to conflict, not avoiding it, bringing the resolution, the remedy to the conflict. That's being a creditor. And so it's not just, I know I got to ask questions, It's really, you're searching for a resolution, And if somebody's got a controversy, the natural tendency, and trust me, you'll see what I mean when you start to do this more, a creditor doesn't take a position. And if you don't take a position, well, then the questions are going to naturally come out because you're trying to see what's their position. So you're going to just automatically, ask a question that's going to try to establish for you, well, what's their position? What is it they're going after? What is it really that they want, that they're trying to achieve, that they feel that they've been wronged, or how can I bring a remedy for them? And it's not that you can bring a remedy to every situation, because you could have a belligerent debtor. who refuses to interact with you or refuses to accept. And no matter how much acceptance you do and how much you try to bring the remedy, you've heard the terms, you can't lead a horse to water and you can't do this and you can't do that. Well, it's because everyone has free will. And I can't hammer into them being a creditor. But that's perfect in a way, right? Don't we need debtors and creditors for commerce to work? If there is no debt, if there is no sin, then there's no point. Like really, do you want, I don't know how many of you are familiar with Buddhism, but the concept of nirvana, how many people which is to me, my understanding, would be a complete state of euphoria, of completeness, of wholeness, of being. Who wants that? Does anybody in here want that?
Who's to say we don't have it now?
Because you're here.
This is complete and euphoric.
The elimination of dissonant mind states.
But do you really want that?
Yes, to recharge your battery.
Oh, no, but you can't have it for a moment. You can create it in any moment. That's the beauty of nirvana. It's the concept of being that is your perpetual state of being. Nobody wants that. Because the minute you achieve that, you'll be running back. You'll be running back to the physical world. Exactly. Yep, to play the game. We all came to play the game.
Do you think that's the reason of why the fallen came down here? They got bored with the perfection of nirvana on a higher level, and they just got bored, came down here to stir up a ruckus and have some fun?
Mm-hmm.
Become alive.
Yeah, the fallen were debtors. Right? I mean, and even with Adam and Eve, dude, they lived in the utopia everyone thinks they want. What happened? They didn't want it. They're like, yeah, this is great and all, but this is fucking boring. You know what I mean? So they said, God said we shouldn't eat this stuff. Let's go eat this stuff. I'm sure that's where the fun's at. So they ate it, and they ended up outside into the commercial zone.
They probably had sex first. I'm assuming.
I don't know. No.
Actually, in the Bible, it says they
No.
didn't even have bodies when they were in the Garden of Eden.
No, because remember, they weren't even aware of their genitalia until after they got kicked out of the non-commercial zone. Because then they tried covering up with fig leaves. And God said, no, I'm the creditor. I choose the form of money. You can't pay with fig leaves. It's the blood of an animal.
Actually, it says in the Bible that they were given their suits of skin after they were thrown out. They didn't have bodies.
Really?
In the Garden of Eden.
That makes perfect sense.
Okay? So the non-commercial zone. So really, do you want to be in the non-commercial zone?
The fruit landed here.
Yeah. And what was the fruit? Knowledge of debt and credit.
Of duality.
Yeah. If there is no knowledge of the two sides, there's no reality. At least as we know it in the physical reality.
Maybe the Creator needed something different to be going on.
Totally. He was bored out of his mind. Come on, whatever. I don't like to, really, it's both, right? It's a unification. I would say, but see, when I say creator, didn't I make a distinction? I labeled it, I made it a thing, I called it creator. Well, I call that masculine energy. Whenever you make something into a thing, it's masculine energy. You know what the feminine is? The container. When you look out into space and you see all the stars are masculine energy. But what's the overwhelming thing that contains them all? The nothing. That is the feminine energy. The feminine energy is from which the masculine energy springs. Without the feminine, you don't have kings. Only women can create kings. They're the soil. You're the seed.
Nothing sacred?
What's that?
Then the question is nothing sacred?
I don't know what that means. What does that mean, is nothing sacred?
You're watching a procession of people in outfits walking by you, and they're holding up a sign saying just a letter N. The question,
I would say everything's sacred. I don't know. So the question is nothing sacred? I guess my question back to you is, what's sacred? Mm-hmm. And it's interesting because what in Masonry, what a Mason would call a Bible, is the sacred volume of law. That's what they call a Bible. The sacred volume of law.
Who's they?
Masons. That's the Masonic term for the Bible. You make your oaths and everything with the sacred volume of law. It's your law. It doesn't have to be the Bible as you know it. It could be your own sacred volume of law. It could be the Quran. It could be the Old Testament. It could be the Old and New Testament. It could just be Black's Law Dictionary. Yeah. Whatever your sacred volume of law is. And that's, realistically, when I look at the Bible, what I see is an attempt in our infinite wisdom to codify what I consider the universal laws. The universal laws. That's what's happening all around you. And we're always telling, and it's funny, like I can watch, you can see it in any movie. They're giving you the debtor, the creditor. They're showing you both sides. How many of you have been able to sign up for the Jack Smith downloads yet? Nobody?
I don't have $100 yet.
You don't have to do $100.
I know, but I gotta send $50 or whatever.
Yeah, you just say, but it only costs $1.50 per download. Okay.
Who's that
Jack
Jack Smith?
Smith, he does the whole creditor debtor thing. That's all he does, is showing you how in every situation how to be the creditor, who's being the creditor, and he does like movie breakdowns. And it's great because you can literally take any movie that Hollywood's putting out there and show that they're telling you everything that we're talking about in commerce, they're showing it in every movie they put out. Like there's some really good ones out now that he was talking about on this week's show. 7 Pounds with Will Smith. Oh, yeah. From his description of it, because I haven't seen it, it was ridiculous, the commercial message in it. And it's funny because nobody's seen it?
Not yet.
Oh, who is Will Smith? What is he alleging to be? An IRS agent. Is he an IRS agent? Nope. And what's he going around doing?
Yeah, you probably want to keep that.
Yeah. So there's.
One thing that he's done that he can't accept.
What's that?
I said there's one thing that he's done that he can't accept, and that motivates him to give to others.
Nice.
And then there's another movie out, Yes Man.
Oh, I can't wait to see that.
Constant Acceptance. What happens when you're always the creditor? Anyone seen that one? You have? Is it good? Does he get a lot of benefits from being the constant creditor? Yeah.
So whose website is this Jack Smith downloads?
Jack Smith, you actually have to contact through an email. It's caleb@glwb.net. And if you send him an email saying, hey, I want to get on the Monday night download list, he'll send you a Word doc or a PDF or something. Yeah, that just says, send $50 here in Federal Reserve notes. They only accept payment in Federal Reserve notes. Caleb. C as in cat. A, yeah, I can write it down. Oh, man. No, that one sucks and stays on the board. Oh, nice. This is the one. You know what? Probably what it is that I'm always writing like this, and that the ink just falls out. Caleb at GLWB.net.
Did you just take a position?
I did. Yeah. Girl, lady, woman, boy. Yes, he did do Gran Torino. That was a good one too. He actually did like 5 movies because they've been off so long, and I think that's all Jack does is not in his off time. He's go to the movie theater, but it's the holiday season, so there's tons of new movies, and he went over, Gran Torino, Yes Man, 7 Pounds, the Stories one, the Bedtime Stories, about a constant debtor who realizes when he finally tries to make the stories where he's the creditor instead of the beneficiary at the end, everything works out in his benefit anyways. You know, so there's a commercial message in everything. In everything. One of the best videos, if you guys can get your hands on it, I'm going to be giving you very limited information actually finding it, but there's a series that's on either Discovery Channel or History, probably History, because I watch History Channel more, on History Channel, where they do like they'll take like a couple days out of history, and they'll show like, it'll be like some major event that happened in history, but they show like on a very small timeline, like what happened in that 24 hours that led up to that event. You know, like everything that was happening on that day in all these different parts of the world, and how all these people doing all these different things led to this one event. And they did the end of World War I. And if you guys want to see what being a creditor is, you got to get this video. Because this guy, the general for the French, there was a French general who was there representing the Allied powers and German politicians. And the German politicians come in, and it's funny because being in commerce, I'm looking for the offers, the acceptances, because it means a lot. Everything that you do in commerce, it's especially on the international stage, when a representative of one nation interacts with the representative of another nation, and there's contract happening, there's some serious stuff going on in that moment. And these guys, these Germans come in, and they're politicians and attorneys. So they're trying to get him to make the offer. Okay? But he's just sitting there. He's all, so what do you guys want? Asks a question. What are you guys here for? What do you want? They're all, well, we heard you guys had some offer of armistice on the table, and we just wanted to hear what your terms were. The French general goes, I have no offer to make. We're perfectly happy finishing out this war the way that it's going. And all of a sudden, the Germans start getting frustrated because the reason they're there is because there's these talks that they've gotten communications from the American president that the French general is going to be working with them to bring a solution to this problem. And so the attorneys, and again, you can see it, even in these actors who don't know what they're acting out, but you can see the frustration that the one is trying to get the upper hand on the other. You know what I mean? But it's like, okay, but they're like, but this guy's a general. You would assume that this guy who's a general, it wouldn't be as savvy in commerce as these attorneys/politicians. You think these guys would really know their stuff. And there's like 3 or 4 Germans, one French guy, one French general just sitting there. And then so they're going on and on, trying to get him to make the offer. And he goes, and then finally the French guy goes, well, if you're asking for an armistice, then I can, I'm authorized to act on that, on that request. And so they go, well, and then they act like the words don't really mean that much. Where attorneys and people in commerce who really know what's going on, they know that the words mean a lot. The words you speak out of your mouth, especially when a contract's being created, they have a lot of weight. So the Germans act like, oh, well, whatever, I didn't know you wanted me to formally ask or whatever, but yeah, okay, we're here. Let's go. I'm formally asking for your armistice. The German says, good. Here's the terms. Yeah, the French, I'm sorry. Yeah, so the French guy goes, good, here's the terms. You made the offer, German guy, right? The German said, okay, we want to know. We want an armistice, please. Okay, so you made the offer. I'm bringing the solution. If you reject it, what's that make you? If you do anything but accept it, what's that make you? A debtor. So that German or that French general had a very good command of commercial interactions. It blew me away watching this show because it was so obvious what was going on in this transaction. It was all offer and acceptance. And basically, that contract that that German general or that French general so savvily contracted them into is what created World War II. Because they literally pulled down the Germans' pants and just spanked them. I mean, it was brutal, the demands this French guy made. He's all, here's how it's going to be. We get all your shit. You don't get to keep anything. We get all your weapons, we get all this, we get all that. Not only that, all 5 of the Allied powers get to go into your country and take possession of your property and control your country. Not only that, I mean, realistically, the Germans really got reamed. But it was because the French general had complete control over the transaction. He had title.
Well, they had to accept.
Well, he accepted their offer. So he took title. Remember, when there's an offer, if I accept the offer, who takes title to the transaction? The acceptor. If I accepted their offer for the request for armistice, I have legal title to this transaction. So if they do anything but accept and make themselves the debtor, I've got legal title to this transaction. And the creditor controls.
So in any contract, you want to position, or I want to position myself to have the other person offering, because if I accept, then I create the terms.
It doesn't matter.
In a contract?
But realistically, if there's people making you offers, always accept. Yeah, that's being a creditor. But if you want to make a contract with someone, doesn't mean you're like going to sit there and try to coax them into making the offer.
No, right.
If you want a contract, you're going to make an offer.
Right, but legally they would have the
yeah, and if they don't accept, yeah, and if they accept, well, then you're going to get what you want, right?
Right. And
if you're the offerer and they accept, unless there's some kind of conditional acceptance, but then it's really a back and forth because you can conditionally accept their offer. Because a full-out acceptance wasn't made, so they didn't take legal title. Unless they fully accept, then they can take legal title of the transaction.
It's just interesting. It's like in my mind, and I don't know if this is conditioning, is if I say, like, for example, you have a debt. So you're like, I owe you money, but I want to write you a contract so we don't make it a big mess. And I'm saying, here's what I'll do in order to avoid this. I'm the one offering. They're the one accepting, but it still seems like I'm the one creating the terms, which legally they have the right to create the terms.
Who says?
Well, but that's what you just said. I mean, not necessarily.
I mean, realistically, anyone could create terms.
He or she could be like, okay, well, here's how you have to do it.
Well, it depends. It was your offer, here's what I'm offering, these things, or are you just offering, hey, can we settle this? Or, hey, I want to pay my debt to you. And then they come back at you, okay, this is how it's going to go. You're going to pay me $100 a month for the next 36 months. At the end of 36 months, you're going to pay me a $10,000 balloon payment. And now it's up to you to either dishonor or accept. And then you can be the creditor again because it keeps switching. Yeah. Every time there's a transaction, there's a trust being created. Literally from one side of the transaction to the other side, a different trust is created. Because whoever's putting the commercial energy in is the grantor, right? Whoever's performing is the trustee, and whoever's getting something out of the performance is the beneficiary. So there's always the 3 elements of a trust are being created in every interaction you have. And that's why, really, that's the law you're under. And that's why creditors control. Because in the law of trust, creditors control. That's just how it is. That's how a trust exists. And because we don't have lawful money that we can execute contracts on, they're all charitable trusts. And you can only have a contract when legal title is changing hands. But the fact, whatever. But a contract has to be executed on law. No, you have to execute on the law with the contract. So a contract that's executed on law would be, here is 5 pieces of gold to go slap him in the face. You receive the 5 pieces of gold, walk over and slap him in the face. We have execution of contract. Legal title has been transferred. Okay? If I give you Federal Reserve notes, which is a debt instrument, to go slap someone in the face, then the contract hasn't been executed because you didn't receive legal title of anything. You received some debt instruments that belong to the United States or actually the Federal Reserve. So you're like, oh, thanks. Pieces of paper from a foreign bank for me to go do something. But because you can't execute what you do have, since you don't have a contract, what you do have is a trust. Because a trust does not require the movement of legal title or property between the parties. A trust could just...
More of an agreement or
it is an agreement, but there's no necessary... it's not necessarily executed. It can be perpetual. A trust can be perpetual.
I have a question regarding if you're in dishonor, if you're going through negotiations, at what point?
No, it's not that one.
Like, what if you find yourself in the point where you're going to be in dishonor?
Give me an example.
So, negotiating a settlement agreement.
And they say, well, you got to pay $25,000 right now before you leave the room.
And the client say, well, so if we don't accept that offer, so do I just create a new offer for them to accept?
I mean, realistically, every situation would be unique. But in a case like that, that can be a conditional acceptance. You could say, okay, well, if I don't have the funds to pay you before I leave this room, would you accept it like this? Now you've really you haven't dishonored them, but you've done a conditional acceptance. You're like, okay, I accept what you're saying. However, not being able to perform on those particular terms, how about we change it to be like this? I'm still agreeing to pay the $25,000, but I'm going to agree to do it after I leave the room so I can go grab my checkbook.
Well, based on what you said, even a conditional acceptance is being in dishonor.
Not necessarily. Did they get their remedy? What I'm saying is if your conditional acceptance is something like, yeah, I accept that upon proof of claim of you having jurisdiction over me, that is adversarial. That is not working towards a common solution. Okay? But it's a conditional acceptance. You see what I'm saying? So you can do a conditional acceptance, just keep in mind there's a conditional acceptance that a debtor would come up with, and there's a conditional acceptance as a creditor that you can still maintain control. And obviously, if they accept your conditional acceptance, then you're working in the right direction. Or it may start the negotiation backing and with a little bit of back and forth. You may be, okay, well, all right, so you can't pay me before you leave the room. Okay, well, can you pay me before the end of the day? And then it can go right back and forth. And then you can be, yes, I accept that. I will pay you by the end of the day. Any more? Any more questions? Oh, sweet. I think we're wrapping up right about the right time. Yeah.
Being that we're at the start of the year, what would you recommend for those of us that are new to this as far as if we're going to be doing 1099 and OIDs? I think maybe for this tax year that we're in now, as far as making payments and such, it sounds like we need to have instruments that are like checks, that paying in cash may not be acceptable.
What do you mean paying in cash is not acceptable?
Well, as far as like if we're paying bills and it sounds like it has to go through our account to create.
Yes. If you want it, OID only happens with the bank. Okay? So the only event, here's an example of an event that has absolutely nothing to do with OID. I have a contract with you, you give me Federal Reserve notes. I take those Federal Reserve notes and I spend them at the liquor store. Those funds never went through the bank. Nobody ever withheld original issue from me or my original issue discount because I just took consideration for my labor or what me and him commonly accepted as consideration. I said, yeah, I guess I'll take this worthless paper for my labor because I can go take it down to the liquor store and they're going to take it for their goods, which are tangible and worth something to me. No, they can't. Because they deposit it, yeah.
Whoever withdrew it originally.
Yeah, the guy who withdrew the cash, when he withdrew the cash from his bank account, if it was in his bank account, he gets to OID it.
Right, or cash it.
He gives it to me, and if I would have put it into my bank account and then wrote a check to the liquor store, then I could OID it.
Right.
But if I just take the cash, and again, this is something you want to kick yourself in the butt for, because for years, I completely operated outside of banks.
Right.
And then I'm like, oh, great, I've been, avoiding the one benefit I could have used to actually, build some abundance. I was like, oh, no, I'm just going to, use cash. Maybe I'll go get money orders. Yeah, exactly. And that's like,
I'm like, run it all through the bank, right?
yeah, run it all through the bank. Run it all. Yeah, exactly. It's funny because I still have the tendency to hold cash in my pocket.
Yeah.
Like I almost never deposit cash. When I receive cash, I always usually just hold on to it because I know eventually it'll get spent. I never get, tens of thousands of dollars in cash, so eventually I'll spend it. I spend cash. So, yeah, up until now, I'm going to start putting that stuff in the bank.
Even the cash, because when, like, for example, if I get I'll have a check, I'll deposit the check, and then I'll pull out most of that in cash. I mean, because I still have bills going out from my checking account.
Okay, so what's the question?
Well, like, why would you have, if somebody paid you in cash, why would you put cash in? Because that's a deposit, that goes to the escrow account.
Yeah, it creates a security. Well, that event didn't create a security, but as soon as I spend it, it's going to create a security.
Okay, well, you're right, versus spending it in cash.
Yeah, I mean, you can. I'm not saying you can't, but you're actually benefiting everybody if you just put it in the bank.
Can I have that cash back and write a check?
You can do whatever you want. But, but did you withdraw the cash? Then you've already got an OID-able event. Okay, then you've already got it.
Yeah, well, that's what I'm saying. Every check.
Yeah, any transaction where money went out. When money went out of your bank account because a security was created, it went through whoever you sent the money to and came all the way back to your bank, and they're holding the security. And in the case of a cash withdrawal, they get the security and never even have to pass it to anyone. They just hold the security. Oh, wait, microphone.
So how about credit cards? If you're doing things with credit cards, if you pay that off with a check, that's OID-able.
Yeah, but because the check came from your bank account, it's your bank account that's withholding the original issue discount. It has nothing to do with the credit card company. But everything you spend on the credit card bank is withholding your original issue discount on that.
So you can still use that. Keep all your credit card records in, too.
Yeah.
Well, it's all recorded anyway. If we don't have it, it's the 3 years duration still, right?
Yep.
That was my question on the OID as far as time frame. If you go back, let's say we've got the 36-month window, but when I issue the OID, is it per year?
Yes, like if you're doing your 2005 expenditures or creation of those securities, then you would file a 2005 OID, and you would have to put in a 2005 1040 to get a return of those funds.
Okay, so we actually have to go get those forms, the 2005 form.
Yes,
2006.
call the IRS.
Okay.
They have a hotline or phone number that actually I've even got it in my phone. That's how often I call them. But they'll send you the forms for free. Just tell them how many you need, what types you need, what years you need them for. Depends if they have it in stock or not. Okay. If they don't have it in stock, it could take over a month. But if they got it in stock, you get it within 7 to 10 days.
So just to clarify, since this is a lot of information for me, this is the first time I'm hearing this. So you're saying if I take a credit card right now and I put on $20,000 on it, I can create an OID with the credit card company at the end of the month and get Well,
at
how
the
does
end of
that
the
work?
year. The end of the year.
At the end of the year.
Yeah.
So there needs to be a time frame?
Well, 1099s only get processed between November 1st and March 1st every year.
Say that again. What are the dates?
Between November 1st and March 1st are the only times they get processed. After March 1st, they kind of just sit there until November 1st rolls around again. But these are just the 1099s. Remember, 1099s are just a report. They're just a report. It's the 1040 claim that brings the money back. However, if you've put these OIDs in and you put a 1040 in and those OIDs are just sitting there not being processed, well, they're going to look at your 1040, they're going to look into their system, they're going, these are fraudulent. This is frivolous because there are no 1099s backing this up. They're not on our record. This guy just printed these up and attached them to his 1040. Okay? So keep that in mind.
Say that one more time. The 1040s are.
That if you file your let me give you an example. If I'm just learning this and I say, okay, I want to go back and get all my 2005 stuff. So I need to do 1099 OIDs for 2005, and I need to do a 1040X if I already filed in 2005, or I'll just do a 1040. But if I send in the OIDs after March 1st of, let's say this year, let's say I'm filing in 09 for my 05, and I put my 1099s in on March 10th, and then I say, okay, well, I'll wait a couple months before I file my 1040, and I file my 1040 in May. I mean, literally, I can wait. Let's say I hold my 1040 all the way till November or October.
You still have to do it after you file the 1099 OID.
It doesn't. Well, what I'm saying is, if you do it, you're gonna get a frivolous because there's no record of your stuff going in because it's just sitting there. It's not actually been recorded unless the corrected box on the form is marked. Then it will get processed between March 1st and November 1st. Above each form, there's a void and a corrected box. You would mark it corrected if there had already been a record on file with this information on it. Okay? It's at the top of the form. It's above each form. You see how each page has 3 forms? There's a void corrected, void corrected, void corrected. Yeah.
So these things will just get.
Oh.
So these forms get processed. What's the benefit to us? Why are we filling out these forms? Why are we sending this stuff in? What's the benefit?
Okay, well, you
for
tell
us?
me. If you're reporting that original issue discount of, let's say, $10,000 has been withheld from you with your bank as the payer and you as the recipient, what does that entitle you to on your 1040? Well, let's say, has anybody ever gotten a W-2 or a 1099? Okay. You know how, typically on a 1099 there's no withholding, right? And you're going to owe a tax. But on a W-2, there's withholding, right? And if your tax obligation is lower than the withholding, what do you get? A refund. So if you've got withholdings of $100,000, but your taxes are only $20,000, aren't you going to get $80,000 back? So if you owe, then you'd have to owe over $100,000.
No, you'd have to owe everything over your bank account OID.
You'd have to owe a lot. And realistically, that means that you received it and then didn't spend it. That means, yeah, I made $20 million last year, but I didn't spend a dime.
Put in your mattress.
You know that, and again, when you learn how to do this as a creditor, but we're not going to get too far into creditor filings yet, because realistically, do them right, do them by the book, and you'll get the best results. That means calculate your tax on the 1040, fill out the Schedule B, because these get listed on a Schedule B that gets attached to your 1040, which the totals for all your OIDs will come on line 8, I believe, of your 1040 as interest income withheld, because the total amount was withheld. And like I said, once you understand the money and the movement of the money, then all you have to do is read the instructions for these forms, and you'll know exactly what you're doing.
So the question I guess I was asking is, if you do owe that year for taxes, corporate, otherwise, franchise, whatever, is that going to be deducted from what you're claiming in an OID? Still.
Yeah. Well, no matter what, whatever your tax obligation is going to be offset by whatever your return is. That you do that on your 1040. It's not like,
it's not
I mean,
separate.
if it isn't already figured on your 1040, you're doing something wrong. Because 1040 says, okay, list your liabilities here, subtract that from this, and that's what you're getting back. So whatever you get on the bottom line of what I get back, that's what you'll get back. Because whatever you owed should be up here tallied up, right? Because they say, go to the tax table, figure your tax. Okay, here's my tax. You're filling out the form as it says to on the 1040.
Do you then have to claim your OID withheld return as income the following year?
No.
Does that count? No, it's not counted as.
Oh, it's return of interest.
Okay, the best question of all, the last one about taxes. You can file to get your taxes that you've paid back, and what is that form again?
Say that again. You could file to get your taxes.
Before the 36 months prior to that.
All taxes can be returned.
What do you mean taxes can be returned?
That I paid.
Taxes you paid?
Income tax, yeah.
You want to get...
It's my understanding that I can get that returned to me in one check.
All the income tax you paid now.
And there's a form for that.
You'd have to correct all the accounting. The fact is, the accounting was done, you owed, you paid, that's it, it's done. Remember, they're collecting for... See, the IRS isn't like a bank. When you give the IRS money, it's going to the creditors. There's no original issue discount being withheld. None of that's happening with them.
Interesting, okay.
It's just money owed to the creditors. You're the one who did the accounting. They're going on your word. They're saying,
as it
okay,
regards the
here's
abandoned
the
vessel, I mean, as it regards my being bonded, it's my understanding that once you're bonded, you can actually request all of that back because it was all withheld from you that, that you were paying taxes without.
I've heard that too. And
okay.
Are you talking about like the ZYA method? Yeah. Let's tell them about our ZYA experience. To tell you my ZYA experience, I got a $10,000 fine. So just to let you know, you could try it that way. Maybe you'll have success at it. I got fined. So it doesn't work. And if you look at what they're doing on all those forms, everything's asked backwards if you understand what's going on in commerce. You start filling out the forms the way they have them on there. And I've heard that it has to do with the private side of OID. I don't know what that means because in reality, as far as I'm concerned, the only people the IRS is concerned with is people in jurisdiction B. The IRS can't touch anyone over here in jurisdiction A. So I don't know what they mean by private side OID. But realistically, it's all over here. Okay. So that's why you calculate the tax. That's why you use the Schedule B. That's why you're the recipient on the OID. And realistically, it doesn't make any sense to do it any other way if that's the transactions we're reporting. Now, there's other transactions that happen in commerce that get reported differently, but the ones we've discussed tonight, when the security is being held by the bank, and you have it, and the issue price was zero, they paid you nothing for the issue, and it's got a face value, that's an original issue discount. And if they don't return it to you, then it's been withheld. So you understand the basic concepts of what's happening when the money moves, and then all the misinformation that's out there on this subject, you'll have no problem with it. You'll be able to see right through because you're not going to be relying on, okay, well, what does Joe Schmo say about this? Well, Joe Schmo says I should fill out the form this way. And I heard that people that do it Joe Schmo's way have success. That's not being a creditor at all. Take responsibility for everything you do. Don't do it because Joe Schmo does it. Don't do it because you heard this is how it should be done. Don't do it because I say to do it that way. Please. I'm giving you the resources to go read. to learn what I know and how I understand it, because you may come to a different conclusion. That's what this forum is for. Go home, read everything, and I want all of you to come back next week and go, Brandon, you're completely off your rocker. That's not what's being said in these documents. Here's what I think, and let's have a discussion. Because that'd be more beneficial for me than anything. It's not even being at the top. It's the challenges that make me re-examine it over and over and over and over again until it becomes clear to me that realistically, I get more out of these classes and the conference calls that I do than you guys do, by far. Because it forces me to think of all of your situations, compute them, and then explain them in such a way that you get it. So I have to explain everything at least 20 different ways. One concept. I probably said the same thing in 10 different ways tonight on multiple occasions. It's because to you it means this, to him it means that, to her it means that, but it's all a different perception. So it forces me into the position of, okay, I need to explain this a million different ways. And once I've explained it a million different ways, I really get what I think I know. But that's all it is. It's what I think I know. Because I don't know anything. Okay? So, read the IRS publications. Read those Federal Reserve documents, because those are really eye-opening.
Quick question. Do you know what happened on that case with the affidavit?
Do I know what happened on what?
On the case with the affidavit?
Yeah, he won.
He did win.
Yeah.
Oh, cool.
And it was, actually there... You want to read, you probably do a search and you'll find the story about it. I don't have the actual story about it.
Well, I have PACER access, so I actually can get
Oh, you can go to the case. Yeah, so you could bring up the case. It was Ohio, I think some Ohio court.
Yeah.
Oh, you printed them. That's right. Yeah, so yeah, the affidavit of Walker Todd. He was an expert witness for the Federal Reserve. And he goes into more detail on what we didn't go into tonight, which is the difference between money of account and money of exchange. And I think I touched on that. Basically the cash you carry around is money of exchange. Really, the only money of exchange was gold and silver by definition by our own laws. But however, realistically, law, for those of you who didn't know this, law is just contract. It's agreement. It's whatever we say it is. Law isn't written in stone somewhere. Law is what we say it is. Whatever our law of our contract is, that's the law. So keep that in mind as well in all your commercial dealings, that law is constantly being created.
Is the definition of law contract?
Is the definition of law contract. Yeah. Yeah. Is the definition of law contract? It definitely is. Because there's no such thing as law without two parties agreeing that this is how we're going to do it. At least two parties. You can post your laws on the walls of your city, and if anyone enters your city, they're by tacit agreement and not rebutting those laws, they agree to be bound by those laws, which is just like the situation you have. You haven't rebutted the presumption that your tacit agreement is in place to the laws that they think you're governed by. Doesn't mean you are, but it is.
Why don't they teach law in elementary school?
They don't teach law in law school. Good question. I don't know, but like I said, they don't even teach in law school. What do they teach in law school? Procedures. They teach procedures in law school. So if they're not teaching law in law school, I don't know where they're going to teach it. Actually, my best education on law from someone outside of myself was referee training, believe it or not. Because they really, it took that, okay, here's the laws of the game. The players agree to be bound by these laws. And then it's up to you to interpret what's happening and to be completely impartial. You have to be impartial to who the parties are and just watch. And from your observation, make a determination. And unfortunately, sometimes you'll have to take a position. But that at no time is the law black and white, and can you say, oh, that's why realistically, this is why I know personally why referees hate the sidelines. Because everybody over there yelling like they think they know what just happened. They don't know what happened. They don't know how to interpret the laws of the game. They don't know that there is nothing written in stone, at least in that sport. Some sports there are written in stone kind of regulations. But in that particular sport, if you notice, Soccer will never have an instant replay, at least for making a decision. They'll even show straight out the referee made a mistake, but they won't recall it.
What about when what's his face got whacked a couple 3 years ago?
He got a red card, didn't he? So the referee caught it, but it wasn't because of an instant replay. You guys ever heard of the 1986 World Cup? The hand of God? Yeah. Diego Maradona in the finals for the World Cup jumps up to head the ball into the goal and punches it into the goal with his hand. The referee didn't see it. He won the game using his hands. It was pretty good. Like, it looked like, because... Oh, was it like that? Because it went like this, and you could see it's like they have a picture of him. It's like a famous picture. He's like, and his hand's hitting the ball. You know what I mean?
The refs over there couldn't see it.
Yeah, well, there was just a player position between him or something, and he couldn't see it. Not even the linesman picked it up, because he'll look over at the linesman, because as a referee, you watch your linesman, and if he's like waving like this, oh, wait, something ain't kosher here. I'm going to go check with him, see what happened. But as the referee, you can overturn anything they say. So if you've got a guy over there waving his flag for offsides, you don't have to call it. And that's one of the things that pisses people off on the sideline. And, when I was a referee, I had like 12-year-olds as my linesmen, you know what I mean? So they're not entirely, up on the laws of the game. So they would be sitting over there waving the flag, and then you'd have the parents yelling at you, "Can't you see your linesman, ref?" Yeah, I can, but I saw the play too, and I know that this player wasn't offsides. So it teaches you a high level of humility being a referee, because you're there for the kids, but the parents are just screaming and yelling, and the coaches, everyone hates you. You're always making an enemy. If somebody won and somebody lost, somebody hates the ref. And that's the same in court. That's why I'm the biggest advocate of the judges. Judges are great people. They're there to help you. I know that being a referee sucks, because there's going to be a loser. And they're going to hate you. And sometimes even the winner hates you. Right. It's like you can't win. All right, anything else we want to square up before we close this out?
The duration of the November 1st to the March, I don't know where it's
Okay, he's asked.
That's for when you need
That's when your 1099 OIDs need to go in. Is sometime between November 1st, after November 1st, before March 1st. Realistically, it should be in the mail by no later than February 20th. Okay? And then if it's a corrected one, or the box is marked corrected, then it's okay to file it after March 1st, and it will get processed.
Can you do the corrected one for your first one, or does it have to be for one that you've been, like, if you filed?
Ask the IRS, read the publications. It's not something I'm going to tell you to do.
And that's because everything's already documented.
Yeah.
During that time.
Yeah, I'm not telling you anything that's not out there for you to just go read that the government gave it to you. Oh, 3 minutes? Okay. Yeah. There. There you go.
So when you encountered the IRS coming at your door, were you just giving them the information of what you filled out on your paperwork? Or what were the questions that they had asked?
Actually, the IRS never showed up at my door.
Oh.
They called me. I got a call from CIC. Actually, no. Take that back. I called my bank. My bank said, "Yeah, hold on. Mr. Adams?" "Yes, Mr. Adams." "Hi, this is so-and-so from IRS Criminal Investigation Division." That's how I got in touch with them. I'm like, ah. So I was totally unprepared. I'm like, oh my God, I wasn't expecting to be talking to you.
You admitted it was you.
What's that? Yeah. And I traversed. I admitted to being the debtor. So I've had experiences with public officials, and the one experience I like to look back on with pride, because it came of a good result, was my interaction with a DA investigator from the county of Riverside. This is back when I was first doing my first commercial processing, and I didn't know what the hell I was doing. I was just kind of oh, well, Winston does this, and so does this, and so I'm just going to do it. And I just said, I mean, all I did wrong was I tried to settle an account by going through the wrong person, and the DA investigator shows up at my house. He's all, is that your signature on that instrument? Because I had written him a promissory note. And remember, I was showing you money orders, and we can go through legal tender, money of account, money of exchange some other time, but I had written this promissory note. He's all, is that your signature? I said, is there something wrong with the document? He's all, well, what do you mean? I said, well, do you have a notice of dishonor or a certificate of protest from the drawee stating that that document is insufficient to settle the debt? He's all, well, I don't know. I go, is that the original? And it was clear it wasn't. It was a photocopy, black and white. Is that the original? He's all, well, no. I go, so where's the original? I don't know. I go, has it been endorsed? Has it been monetized? Again, I'm asking all the questions. But at the same time, my way of being was, I'm here to help you. You know, what is it you need? You know, that's basically what it came down to. I'm like, okay, well, what do you need? What do you want from me? He's like, well, why did you do this? I go, well, I'm trying to settle a debt. He's like, okay. He's like, well, why did you send it to this guy? I go, at the time, I thought that he would have the fiduciary capacity to settle and close that account. If he's not, I'll send it to someone else. I'll write a new instrument and I'll send it to that person. I said, yeah, I go like this. I go, actually, I bet your boss is probably the best one to send it to. Shouldn't I probably send it to the district attorney? He's all, no, don't do that. And so, and after, so many minutes of the conversation, I find, he walked away and he said, thank you very much. You've been very helpful. I said, if there's anything else you need, feel free to call me, send me an email. I got no problem with it. I go, but just to let you know, I did report the transaction to the IRS, and if I don't get some kind of response from you soon, I'm going to liquidate through Treasury on this account. He's like, well, I don't even know what that means. I go, that's fine. You don't have to know what it means, but it's going to happen. Just like he pretended like he didn't know what the word fiduciary meant. And maybe he doesn't. But I'm like, you work for the district attorney and you don't know what a fiduciary is? He's like, well, I don't even know what a fiduciary, what does that word mean? I'm like, okay, whatever. But the fact is, he actually called me a couple weeks later, and he's all, yeah, Mr. Adams, just wanted to let you know, there's no investigation, everything's fine, we're not pressing any charges or anything, but it wasn't, I wasn't controversial, I wasn't adversarial, I was there to help him, I was coming as the creditor. They clearly saw me as the creditor, and even the IRS CID guy, I'm sure it was what I said, it was because I was like, here, I'm here to help, what do you need? I'll send you records, I'll send you this, I'll send you that. I was acting like a creditor. There was no reason for him to even come see me personally. So yeah, you may get challenged because you're testing yourself. So you're always in this constant test, and you're always going to be testing yourself. And yeah, you may, and those are the best tests. But here, you guys want to be ahead of the game? Do it in your life before you go out into commerce and do it. The next time your boyfriend or your girlfriend or your kids or your parents seem, in your point of view, to be raising a controversy, or if your automatic reaction is to get defensive or anything, really think to yourself, how can I be the creditor? How can I just accept my husband's point of view or my wife's point of view or my kid's point of view and bring a resolution, bring a remedy to this issue? I'm just going to accept it. That's okay. Dad, you're an asshole. I accept that. Is there a reason you think I'm being an asshole? We can work on it. You know what I mean? Like, not coming in as, well, you're an asshole. You know what I mean? Instead of getting controversial and adversarial, if we all step back and said, I'm going to be the creditor, and everyone started doing that, do you see how quickly all controversies and adversarial situations just kind of melt away? If we all decide to just step up and be creditors, we all say, hey, yeah, no, I'm going to bring a resolution. How can I help you? Let's all be yes men. And women. Take responsibility. Yeah, that's the number one lesson for being a creditor. Take responsibility. Thank you very much, everybody.